Hey, we're live. Look at that. Shkreli Serrano says, hey, Luke on today. That's right. Luke is on today. Hot Stocks, Luke Jacoby will be on about a half hour from now. Good show today. We got Vivi, the Biotech queen, on in a few minutes. Talk some Biotech. If there's anything at all to like in Biotech land, she will find it. We'll have Luke Jacoby on at noon, like I said. Very excited for our two guests after Luke, though. At 12:45, we got Andy Hayward. It's been a while since we've spoken to Andy. Actually, how long has it been? Andy Hayward is the CEO of GNUS Brands. We last had him on this very show in August. All right. Well, it's been 9 months since we've had Andy Hayward on this show. We'll get him back on. They had some news yesterday. That'll be at 12:45. And then at 1:30, Greg King, who I actually met over the weekend at Fintuit. He's the CEO of Osprey Funds. They offer a number of crypto based things you can trade. And he's going to give us his thoughts on the crypto market right now and where to hide if you're in crypto, where not to hide in crypto, and what the future holds. So Aaron Bree is sitting right next to me, but he's doing some back end YouTube work, so he'll come on in just a sec.
I can come on right now.
Oh, look at that! See, he's here right now. So everyone in the chat, who's there? Eric. Eric, that's a great question, man. That's a great question. That's why we're doing this, man. That's why we're doing this.
Spencer, how are you feeling right now about the overall market?
Wait, can we just address this comment? I'm wearing a real shirt. Do I not wear a real shirt?
He's typically in like hoodies and like.
This is you want to know why? Honestly, it's because of Charlie Batch. It's because we actually have an in-person guest on Cannabis today, Cannabis Insider, former NFL quarterback Charlie Batch. That's why I'm wearing this shirt. So yes, let's address that. Well, now, what do you want to say? Sorry, I interrupted you.
I was just gonna ask how you feel.
Is your Nate still going?
Yeah, watch. I'm gonna.
What a beast!
Hey. Oh, he just ended it.
What a beast that Zunate is.
He just ended it. All right, so I just wanted to know how you're feeling, like overall bullish, bearish on the market right now.
What's up with our TV right now? Why is it doing that
That's
weird,
pretty cool.
that weird stuff?
If I was on some things, that TV screen would probably look really cool.
Yeah. Where am I on the market?
Yeah. Just
okay.
Overall bullish, bearish.
Yep. I would say I'm neutral to bearish right now.
Okay.
For the short term. Nothing has happened this year to make me change my mind that it's going to be. I've thought that there's a very good possibility that we end the year like unchanged to down. I still think that. I still think now is not the time to be taking anything long, short term, or intermediate term. Like if you want to go long for like, a couple like an hour or something, like go for it, right? But if you're trying to go long for like a day or 3 or a week or 2, this is not the time for that. Unless you're going long like inverse stuff, right? If you're like betting on downside, if you're buying like some inverse leverage ETF.
I wouldn't even be doing that down here. I mean, I wouldn't want to be stuck short. Like
I'd rather bet on downside than bet on upside.
Okay, I disagree there.
Okay.
But basically, where I'm at, so I was in agreement for the large.
Today's show is sponsored by Kirkland Contact Lens Cleaner.
Shout out Costco. And by the way, Costco is not raising the price of its hot dog. That was a fake news.
We can address that.
Fake news.
Yeah,
Yes, we will address that. I am in agreement with you where at the beginning of the year, my sentiment was like, okay, I think we're just going to be mainly choppy. Like I wouldn't be surprised if SPY ends the year like pretty flat, down 3-5% maybe. But now that we're down like 20%, to get back to that even point, we'd have to come back up. And I'm at a point where I think right now, and Spencer, I know you've talked about this, where we looked at the markets crash during COVID and said, oh my God, this is a once-in-a-lifetime generational buying opportunity.
Yeah, but then I missed it. So
and now you're saying you don't want to buy the dip here. You'd rather be short. And I'm not saying this is the same thing, right. But here's where I disagree. Where I agree where I wouldn't really want to be going intermediate longs. Like I think this market is very tough. Like I wouldn't be trying to swing trade anything long like 2-3 like weeks out.
So we agree.
But if you're I was gonna say I think if you're looking at making like long-term investments, right now is a great time to do so.
I agree with that too.
And
I agree with you.
I'm actually very So yesterday, for maybe the first time, not for the first time in this whole drawdown, but I was like, oh man, because we've been talking about how like the markets have been shitty, but consumer demand has still been high. And then Target came out and it was like, oh, well, there goes that out the window. But yesterday for the first time, I was like pretty bearish. And then my second thought after that was like, wait, I'm getting trapped in just like the retail investor mindset. Like as right when we can't take any more pain, I'm going to get bearish and the market's going to turn back up, just like if it was flipped and the markets were ripping right when SPY's up 6 weeks in a row, I'd be like, oh, I got to buy. I have that FOMO. And that's when the markets turn around. But today I was doing some more digging and
like actual digging?
No.
Or like metaphorical?
I was doing like research digging.
Oh, okay.
I was getting deep into just the wide world of sports. No, not sports, but finance.
Finance?
And reading a little bit more. Let me pull up.
Did you discover Zero Hedge? Is that what happened?
Yeah. Yeah, Zero Hedge, the famous bull.
Hey, I've seen crazier things than Zero Hedge turning bullish. Okay, wait. I want to address this comment while you look that up.
Yeah.
Okay. What? Who said it? Who said it? It was.
Okay, so wait, I want to show.
Okay, fine. You do your thing, and then I'll.
I saw that. I gotta get my screen
share
shared
screen
and whatnot.
up. Yeah.
So it's not a secret, right? When we came out of COVID lockdowns, when we came out of lockdown, consumer spending went through the roof.
It was pent up. Nobody was spending any money.
Right.
And then all of a sudden, it wasn't that they weren't spending. It was that the spending just shifted, and because nobody could go anywhere or do anything, they were spending money online and like never before, and it just kept on going.
It's not part of it. Part of it is because there were price increases and people were spending money on things that were now more expensive, so that consumer spending is going to be a little bit higher, even if people are buying the same amount of goods because the price is higher. But on the flip side, there were also goods that were like discounted because of COVID that people were just buying out the wazoo. So, here's a like chart, and I was looking at a cleaner chart earlier, and I was just looking to find it, and I haven't in the last like 2 minutes, so I'm going to share this one instead, this is still from the Fred, but I was looking at one that was like directly from the Fred earlier.
Wait, can you for the noobs out there, what is the Fred? Who is Fred?
St. Louis Federal Reserve.
Do we know why they call it the Fred?
I have no clue.
Me neither.
I think Fred Bird, maybe.
Who?
Fred Bird. He's a Cardinals mascot. That's the only thing I can think of.
You know what? We're going with it. We're going with it.
So record consumer spending on durable goods. You can see right here, it crashed during COVID and then just skyrocketed. Yeah. And we really haven't gotten back to kind of pre-COVID levels of consumer demand. As you can see, it's pretty level, and then out of nowhere, it just shoots out of the gates. And this is what I'm talking about with yesterday. I was like super, downtrodden by the Target report, and I was reading more about it. And here's...
Wait, can we just address what are durable goods real fast? Durable goods are big ticket items,
right? Think like furniture,
appliances, like office chairs.
I don't know if cars fit in there.
I also don't know if computers fit in there.
Right, but the point is they're not like they're not food,
right.
Not certain goods. Right. Wait, is it not St. Louis? Is it just Federal Reserve economic data?
No, I like our thing better.
But I thought the Fred was like specifically from St. Louis.
I thought it was too.
I might have gotten that from you, and it's not right.
I like the Cardinal mascot name better. That's what we're gonna go with. I don't care what you say.
But so here's from.
Wait, we just lost your screen.
I know. I'm gonna share a different screen now. So this is from the Target. This is from the Target CEO. He says, "While we can't project into the future, I wish I had that crystal ball in front of me. We can tell you what we saw during the first quarter and the start of May, where we just continue to see a resilient consumer. Our traffic numbers are up to start the second quarter. They're shopping multiple categories." So again, the official story is all about consumption mix. So basically what he was saying is that a lot of these, the pattern in the way that consumers have been spending since COVID were different than pre-COVID, and Target's been trying to match that post-COVID consumer. well, now we might be reverting back to that pre-COVID consumer, and they're not as well to equip with that. That doesn't mean that there isn't still consumer demand out there.
That so does not jive with what Cole said this morning.
What Cole said this morning?
Yeah.
What did Cole say?
Cole said the first three months of the year, the first quarter, great. The last 2 months, terrible. So she said sales considerably weakened in April as we encountered macro headwinds related to lapping last year's stimulus and an inflationary consumer environment. So, all right, Kohl's and Target are not the same business, right? We know this. We know Kohl's. We know in a recession, people are going to not buy new clothes. And we know that they're probably still going to buy food. We think. We assume they're going to buy food. So, it's not quite apples to apples, but it's like apples to pears, right? It's a reasonable comparison to make.
Yeah, and I think part of it, too, if you look at, a lot of extra, like, UI, unemployment, benefits and stimulus really didn't end until like the very end of 2021.
Some of it, that's true.
So true. Like maybe, I have seen that too. Like a lot of people saying like, well, maybe this is the effects of people that had extra money to spend. Now we're finally seeing like 3 months after that, those benefits ended. Yeah. Seeing the ripple effects in that throughout some of these consumer brands. But I don't know. Like,
I want to go back though to how we started this whole conversation, and then I'll roll the intro, which we haven't even done yet.
Right.
Because we actually do agree on our market view. I'm pretty neutral to bearish in short term, intermediate term, long term though, and a few people in the chat said this as well. Long term, I am a perma bull. Perma bull. Hear me. A few weeks ago, or maybe last week, I said somebody asked me what I would buy right now. I said I'd buy SPY or VU, whatever, same thing. That's what I'd buy, like long term. I would buy the S&P 500. And I'm going to say this. If you have a long-term time horizon, I'm talking years or even decades, just buy it now. If you know you're not going to get shaken out in the next 12 months, buy it now. Someone in the chat said it's better to be late than early. Ali Ong says, don't be early. It's okay to be late. In theory, yes. The problem with that thinking, though, is it is so hard to get back in once you get out. Like, once you get out of the pool, it's so hard to get back in. And you can ask Dennis about this on pre-market prep. Dennis went, like, a lot of cash in March, April 2020, right? He got defensive quick. And he still has a lot of cash. He missed... From in terms of his investments, not his trades, his investments, he missed the entire, not the entire, but a lot of the rally last year. Okay, if you know you have a long time horizon, my non-professional advice is just buy. There's a really good new book out that is making the rounds. I haven't had the chance to get my hands on it yet. It's from Nick Majuli. He's a financial advisor. It's called Just Keep Buying. And I haven't read it, so I can't endorse it, but that's what I'm saying right now, right? Just keep buying. If you were talking about long-term stuff here, years or decades, just keep buying.
Yeah, and what I'll say to that is, I mean, I think both ways. Wait, ABL. Oh, thank you. So I think both ways you can make the argument for. My thing with it is like, so say right now I'm making a long-term investment, Spencer. If I buy SPY here and it goes down another 10% and I'm holding it for 10 years, is that really, am I going to care in the long run?
Exactly.
No.
Are you going to care in the year 2030 what happens in the year 2023? Of course you're not. The people that benefited the most from the massive bull run in the 1980s or the massive bull run from the last decade were those that just kept their heads down during the crises that were just before that, right? They just kept their heads down. So if you're an investor, be an investor. That's not the same thing as being a trader. Again, short term, buying anything long here for a short or intermediate term seems like a bad idea to me. But like long term, I have it automated, all right? Every single paycheck that I get, it's automatic. I'm just dollar cost averaging every single month, okay? To my 401k, my Roth IRA. It's the same thing. Just keep doing that is my honest take. It's not very often you get the chance to buy stocks at discounts like this, relative discounts. I mean, some valuations are still very high, and there was a very good chance we will still go lower. But I learned a very hard lesson in 2020 because I did say, Aaron, that I did say it was a generational. I thought this was a once in a lifetime buying opportunity for me. Yeah, and you know what happened? I tried to time it, and I didn't. And if you time it, it's because you got lucky, not because you're good. All right? I tried to time it. I ended up missing the bottom, and then I thought, this is so stupid. This is so dumb. And then I sat down and I made a plan. And I said, all right, Spencer, every single month on the same day of the month, I think I did like the 15th, every single month on the 15th for like 4 months in a row, I just did an epic amount of buying. And I put all my cash to work. All the cash I had was almost all of it was gone in 4 months. I just bought everything, right, that I wanted to buy. So that's my advice. I learned a hard lesson about timing market in 2020. You can't do it. And if you do end up doing it, congrats, you got lucky. Keep the eye on the horizon is my...
Yeah, and the last thing I was going to say before we roll the intro and really get the show started was that, to Ollie's point, I do think that the kind of the same thing where I said, like, if I bought SPY now and it goes down 10%, if I wait and SPY goes up to, another 10% and then I get in, is it really going to matter in the long run? Probably not, but there are a lot of studies that show that just missing out on, like, the 3 best trading days of the year, like if you were invested into SPY all trading days in the year, aside from like the 3 best days out of the year, your returns get absolutely clobbered. So if I invest in SPY now and I miss out on a day where it's up 3.5%, then my returns maybe won't be as good as if I just invested now and sat it and forgot about it.
Mage Pie is asking, what the hell is this show? It's a great question. I don't even know myself. Someone asked...
We are going to be interviewing Genius Brand CEO Andy Hayward.
Yeah, someone asked when that is. It's going to be at 12:45. Yes, it's on the calendar at 12:45. So 12:45 is when Andy Hayward is scheduled to come on. If you want to leave us and come back in an hour, I won't be offended. I really won't.
Yeah, we're just going to be talking about the general markets, any big headlines. We've got a few
Several
things.
headlines. We got to talk about crypto. We got to talk about Melvin.
We got to talk about...
We got to talk about Melvin. We got to talk about the Costco hot dogs.
We got to talk about Elon Musk.
Oh, man, do we have to?
Yeah, we got to talk about some Elon Musk today. Yeah.
All right, Aaron Breen's getting yelled at right now in Slack, so he's going to go deal with that.
Wait, from what?
From Zoltan. I'm going to go run the intro. And we'll be back in like 10 seconds. We'll be back in like 10 seconds. Or I'm getting yelled at too. We're both getting yelled at. How about that? It's not just you. It's not you, it's me.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
Yeah. All right, we're back. You know what we haven't done for a few days now? Shamefully on us.
Crypto update?
Yes, we've been very, very bad. So let's get that out of the way right now. Look at the heat map. How are we doing here? I can't believe what my eyes are seeing. Can you believe this? Now, this map is a little bit delayed, the data is, and it's a rolling 24-hour map, as I understand it. So, but hey, I don't even know the last time I saw this, where the heat map was green for every major crypto. Of course, this heat map is missing a long-time member. Luna is no longer on the heat map, obviously. But hey, Bitcoin above 30, ETH above 2,000. What else we got? Solana at $53. What a disaster. What a disaster. Oh my gosh. Guys, should I buy more? Solana is the one crypto that I only bought at one time. Do I buy more Solana or no? I honestly have no idea what to do with that. I don't really know what to do with any. I own Bitcoin and Ethereum as well. I don't really know what to do with those either. Maybe I should take my own advice, right? I only bought crypto in the first place because I didn't have any and I wanted to get some exposure. It's not as if I own a lot. But maybe I should just take my own advice and just keep buying and close my eyes. That's what I've been doing with Bitcoin and Ethereum. Should I add to my Solano or what? Lineage says don't buy it. Oh, I don't know. TBD on this. I've been pretty steady though in my Bitcoin and Ethereum stuff. So, Lord Byron. Now we're talking. Anyway, this is the crypto heat map. You can find this heat map on benzinga.com/crypto. If you want free Bitcoin, yeah, I said it, free Bitcoin. Go to Voyager, open an account there. Use the code ZING when you sign up to create your account. Fund your account with at least $100, and upon doing so, they will send you $50 in free Bitcoin. All right. Supposed to be joined real quick for a few minutes by Vivi the Bio Queen. Don't know where she is.
All right, well, we're waiting for Vivi. Can I go off on my my Elon Musk rant?
Please, I whatever you say, I have nothing to add, probably. So just go for it. I don't even know what you're gonna say. I'm so over it, dude. I'm so over this.
Okay, at least within the last 2 months,
I can't handle it anymore.
Elon Musk has been the worst Fortune 500 CEO in the last 2 months.
What does that mean, the worst?
Like, he has done the most to... If I were... Which I am a Tesla shareholder. I honestly... Like... All right. You know what Michael Jordan said? He said a lot of things.
You miss 100% of the shots you don't take. No, that was Michael Scott.
That was Wayne Gretzky.
That was Michael Scott.
Right, yeah.
All right. No.
Michael Jordan said Republicans...
Wear sneakers, too.
Wear sneakers, too.
Aha.
Elon Musk has to know that
Democrats drive electric
Democrats
cars.
buy cars too, and like Tesla's like prime market is that like elite liberal California Democrat, and he's going out of his way to just alienate. And meanwhile, while he's doing this, if you turn on the TV during a basketball game, like every other commercial is for a new electric car. You have like GMC.
Dude.
So if you're a big time like lib out in California and you get pissed off because you see Elon tweeting about, oh, Democrat is the party of hate, and like I don't care what his political stance is. If I'm an investor in a company, which I am, I want the CEO to be politically neutral. I want to be able to sell cars to both parties. And then you can say, oh, well, he's in Texas now. He's probably trying to cozy up to the Republican lawmakers in Texas so he can get some of the subsidies and stuff he was getting in California. That may be true.
I don't know.
That may be true. But Texans, for the most part, buy pickup trucks.
Yeah.
And Tesla can't figure that out. Can't figure out the pickup truck thing, it seems like. They can't.
I love this comment, too. There is nothing that Elon Musk can do that won't like cause people to say, actually, he's actually playing 3D chess and you're playing checkers. He's actually doing this because he's smarter than everyone. He's 4 steps ahead. Mike P, maybe you're right. Aaron, maybe you're right.
Jay, I disagree with you, Jay, here. Libs, doesn't matter who you are, we're all the same. Conservative people, when
everyone's a hypocrite.
Yeah, when they see Disney, they say we're not gonna send our kid. There will be some libs that probably hate Elon Musk that still buy Tesla, but there will probably be some ones that say, hey, you know what? There's not a lot of difference between me buying a $60,000 Tesla and this $60,000 Mercedes, and Elon's kind of been bugging me. Screw it, I'll go with the Mercedes. I think if I were, what would it take? Would it be like Tesla shareholders have to band together to say like he's hurting the value of our stock and like vote him out? Like, what would that process look like in practice?
I don't know. I think Elon Musk is Icarus. I think he's flying a little bit too close to the sun. I'm fatigued, man. I'm so fatigued. I'm tired.
Yeah, that was a funny too.
I can't take it anymore.
Andy O saying as he publicly creates hate and division. He literally tweeted. I saw these like 2 tweets back to back. Someone's posted a screenshot like 2 weeks ago. He was like, "We need to make Twitter moderate," which means pissing off the right and the left equally. And then 2 weeks later, he's tweeting, "The Democrats are the division of party and hate." It's like how you literally cannot be more hypocritical than that. And Brock, I hear that. I think Elon Musk means more to Tesla than maybe any other founder or CEO
110%
means to their company.
For sure.
With that
Not even
said,
close.
like after the shakeout of Elon leaving Tesla, I'd probably be more bullish without Tesla. Because as an investor, like I'd want the peace of mind of knowing, oh, I wonder if my CEO is going to tweet something out that is going to piss off 50% of the people in the country.
I don't know. My only thing that I'm just sort of waiting to see is like, so no one has ever really legitimately challenged Elon for anything, right? So there's two. The way I see it, there's like two outstanding battles, and I don't even care about like the political comments. I honestly don't care about that. I really don't. Okay.
I don't either. If he was if he was just a guy, like if he's Jeff Bezos, like who's not affiliated with he doesn't work for the company, whatever. But as like the leader of a publicly traded company, like you should have those.
Yeah.
Yeah.
All right. So here's what I want to see. What I'm very curious to see. One, what happens with this Twitter deal? Because Twitter and him have a contract at $54.20 a share. Okay. He does not want to pay that, obviously, right? He's come out and said so without saying so, but he's basically said so. So what happens there? And like, is some regulator at some point ever going to step up and legitimately challenge him for any of the falsehoods that he's said about his company, about maybe about Twitter? Is he going to be Icarus? I think the more he talks, the greater the chance that someone's going to just knock him down 5 or 10 pegs. I sort of hate this culture of entrepreneur worship that we have in this country. Elon Musk has done some amazing things. I thought the thing yesterday about like Tesla being removed from the ESG index was like the dumbest thing ever, because Elon has done more for EVs than any single person ever. But I think just the more he talks, the more he's greater likely that he gets himself in trouble somehow. Like he's not. No one's bulletproof.
Yeah,
no one is bulletproof.
I agree with Elon that whole like ESG thing is bullshit. Anyway, like they have Exxon in the top 10.
Yeah, it's
honestly,
dumb.
I don't disagree with them.
It's dumb.
Like if they would have right when Tesla invested in Bitcoin and said, all right, we're taking Tesla out because Bitcoin's not environmentally friendly. Like that's fine. Like that's legitimate. But it seemed like timing wise, it seemed like they just did it. But yeah, like what you're saying, I'll read this thread real quick on Twitter. This guy said, I'm an ex-hotshot litigator. Which,
that's cool.
Cool, yeah. He calls himself a hotshot in the thing. I can read the Twitter docs and know how these things play out in real life.
I saw this tweet.
Elon has successfully violated legal constraints without real consequences for his entire career. It has made him overly bold, which is your point, like he's Icarus flying close to the sun. This is the one he will finally probably lose. If and only if Twitter board maintains its spine. Until yesterday, I assumed the board would cave, but now it appears Elon has overreached. This Twitter thread's from a couple days ago. This was in wake of Twitter board coming out and saying we are going to hold Elon to that original price in the deal, but now it appears Elon has overreached. He may have backed the board into a corner so tightly that they will fight and then keep fighting. And then Matt Levine, who is also an ex-lawyer, was writing on it as well. So,
you know what I can't wait for the day for, and I can't believe I'm saying this. The day Elon gets suspended from Twitter. That if Elon got suspended from Twitter, we would talk about him 75% less than we do.
Yeah.
I think.
But
easy.
If that happened, he would, yeah.
Jordan says Elon knows what he's doing.
Perhaps
he does.
So I also saw this. So in the tweet yesterday, if you guys missed the one I was alluding to, he basically said,
I don't know. I don't even care at this point.
he basically said in the tweet where he said Democrats are the division of party and hate. He said, now watch their like tricks unfold against me. Someone was speculating that the part about like now watch their tricks unfold against me is like he's trying to get out in front of something, like some story is about to come out, and then when it comes out he can say like, see, here are their tricks unfolding against me. That was just someone speculating, but it was like he obviously he's either like gone completely off the deep end or he has some like 100 IQ level play that I can't see right now.
Can we just all agree that life is not black and white and it's a shades of gray? You can love Elon Musk and acknowledge he's said and done shitty things, and acknowledge some of the lawsuits against him as being legitimate, and acknowledge all of that while still thinking he's a great person. You can do that. It's not doesn't make you a hypocrite or contradictory. Well, I hate the idea that we have to automatically agree with everything that someone says because we're on their side. Or
I agree.
right?
I've said that a lot about Elon
yeah.
Musk, that he's one of those polarizing guys. I see myself like more in the middle. Like I like.
Wait, is this true? Is that true?
Yeah.
Oh shit, I didn't know that.
Yeah, they started dating. Actually, like I think like he started dating her while she was still technically married to Johnny Depp.
Oh, I didn't know that.
Yeah.
Oh my
I
god.
think his name's been brought up in the thing a couple times.
Whoa, I did not know any of this.
Yeah.
This is how far my head is in the sand.
That's honest. Like Elon Musk, like he's like, well, I don't think he's the richest man in the world anymore, but like he was like the richest man in the world. What?
He might still be.
I don't know. I don't think
right.
so. But anyway, he
Oh man,
can do whatever he wants. Has the most money in the world. Has relationships with all these like supermodels, and then still comes on Twitter to like post 69 jokes for the approval of like 20-year-olds on Twitter.
That's
It's like
what makes him crazy.
I know.
All right, let's talk about Melvin Capital. Someone in the chat made a funny joke, more like Melton Capital. Melvin Capital is unwinding their fund. Gabe Plotkin, who rose to infamy for his bet against GameStop, and then was it like a month ago or was it 2 months ago? He tried to basically reset the fund, which would have triggered a whole bunch of bonuses and fees paid out to him and his firm from their investors. Then a month ago he tried to reset the fund, and that didn't work. So now they're closing. There is we don't really know exactly how far or how bad Melvin has performed. We have like third-party data. Bloomberg reported that they're down 23% this year. Let's go with that number, 23%. So Melvin was down almost 40% last year and 23% this year. Typically, investors who invest in hedge funds will have their money locked up, so it's not as if investors can just suddenly decide, hey, give me my money back right now. But it appears that has happened. There's been a lot of redemptions in this fund, and he's saying, well, all right, we're going to call it. We're going to call it. This is a huge victory for everybody who was on the AMC GameStop train. Everybody probably feels good about this headline. In fact, I don't know anyone that it's really impossible to feel bad for a guy like Gabe Plotkin. Even if you like are sympathetic, it's just very hard to feel bad. At the end of the day, he's still a millionaire, right? He's still in the 0.1%. He will probably end up managing money down the line again in another fund somewhere. That's how these things go. So,
and that it's kind of a bigger, what is it? I guess it's an example of a bigger thing in business and finance in general. Just this idea of
white men get second chances.
Failing. Well, I was gonna say failing up.
Failing up.
But yeah, and what I want to talk about, what I want to talk on that too, is I wanted to mention our good bud Martin Shkreli here.
I think, Shkreli. I don't know.
The Shkrelmeister.
I will say, when I interviewed him, he gave us.
Wait, you interviewed him?
Yeah.
At what?
Martin Shkreli was on pre-market prep.
For real?
In 20, I'll drop the link in the chat. He was on pre-market prep in 2016.
Was this like before he bought the Wu-Tang Clan thing and everything, or after?
It was right around the time. It was before. It was before he went to prison.
Okay. Obviously.
He was on pre-market prep in 2016. He gave us some pretty good stock picks.
Really?
Actually, yeah.
Like in the biotech space.
Yep. Here, I'll get you guys this. It was September 12th, 2016. I'll put the link in the chat.
So this guy, and I mentioned this the other day, I was reading about him because like I've known, I think he's been in my, I've known about him for a while, but I've never really like known his full story. I was reading about it the other day. So basically, He comes from a pretty like middle class upbringing. He seems like a good student. He gets like an internship on Wall Street when he was 17. He starts his own hedge fund in 2006.
With mommy and daddy's money?
He was born in 1983, so that makes him 23. No, I don't think he really had. That's what I'm saying.
Right.
I don't think, at least from the way, I don't know, some of these guys like to, make their story fit their own narrative. I don't know. I'll assume that he's, comes from a good upbringing if he's working on Wall Street at 23. But anyway, he starts his own hedge fund at 23, Aliyah Capital Management. In 2007, so a year after the fund was founded, Lehman Brothers sued Aliyah in New York State Court for failing to cover a put option transaction in which Shkreli bet the wrong way on a broad market decline.
No.
When stocks rose, Shkreli did not have the money to make the bank whole.
No.
In 2007, Lehman Brothers won a $2.3 million default judgment against Shkreli and Aliyah. So, okay, let's back up for a second.
So he basically...
He's a 23-year-old kid that creates his own fund.
Yeah.
Puts a risky options play out there.
Loses.
Blows up. Loses $2.5 million that he doesn't have.
Yep.
Now just ask yourself, like, would this be someone that should be managing money or a hedge fund, like, again, like...
Failing upward
whatever.
is the name of the
game.
game.
So here's where he gets lucky. Lehman Brothers wins the $2.3 million judgment against Shkreli and Aliyah, but Lehman collapsed before it could collect on the ruling. So he just gets lucked out that this Lehman Brothers, like, happens to collapse before they can collect on it. So then,
that's pretty funny.
The next year when he's 25, he starts a new fund, MSMB Capital Management, which is Martin Shkreli and his friend Marek Bistek, their initials together. And then, wouldn't you know it, history repeats itself. On February 2011, on a naked short sale in an account it held with Merrill Lynch, MSMB Capital sold short 32 million shares of Orexogen Therapeutics, stock at about $2.50 a share. Yada yada. The stock price rebounded. MSMB could not cover its position, although it had told Merrill Lynch that it could. Merrill Lynch lost $7 million on the trade. MSMB Capital was virtually wiped out. Bottom line.
So that's 0 for 2?
0 for 2.
That's 0 for 2.
He's 25 at this point. Has
He's blown up 2 funds already.
Wiped out 2 funds.
Sounds like me.
Yeah, exactly. And then he, gets another chance, has some moderates. I don't even know if he has moderates. He's doing a lot of like schemy insider trading things then after this point. But the point is like, if you thought, it's just a joke that you can have that track record and then be given more chances on Wall Street.
Yep.
It's like, come on.
You mentioned Lehman Brothers during that whole thing. Bloomberg had a very good article. I'll drop the link in the chat right now. This came out yesterday, all about basically the fact that Lehman Brothers still exists, and for the last 15 years, there's been a small army of lawyers and judges that have had to unwind that bank, and it's taken 15 years for it to happen. But they basically just talk to these people that still work at Lehman Brothers all these years later, trying to like decide, all right, who gets what, because it's complicated in a bankruptcy. They did talk to a guy that in 2008 bought a truckload of Lehman Brothers swag for $5,000, and he wasn't specific, but he said, I think the exact quote was, "Let's just say I made back my investment."
Off the swag?
Off the swag.
Because, like, it's just like a novel. Like, people want to buy the swag.
Yep. Great trade. Let it be known. The next time we get a major corporate bankruptcy,
the swag will be
I'm buying swag.
The swag will be in vogue in about 5 10
I'm buying
years.
swag. Let's all buy the swag. Okay?
So I saw this from Liquidity. Martin Shkreli.
Yes, Andy, 1245.
Martin Shkreli and...
Or DMI, sorry.
Martin Shkreli and Billy McFarlane were released from jail on the same day.
Billy McFarlane makes a cameo in the rich girl show on Hulu, the Anna Delvey show.
Oh, really?
They like hooked up or something.
Okay.
Yeah.
Wait, so there's a Hulu show about Anna Delvey that's more of like a documentary, and then there's the one on Netflix that's like in reenactment, right?
Oh no, that's what I'm talking about.
Oh,
so whatever.
Inventing Anna.
That's
okay.
what I'm. Wherever.
I didn't know if there was like a more serious like
wherever that show is on. I don't know. I can't keep things straight anymore. My head is all jumbled. Okay, so Melvin Capital going away. Gabe Plotkin going away for now. I'm sure he'll be back. Big victory. If you're in on the GameStop and AMC stuff, give yourself a round of applause. Big victory for the little guy here at the expense of a hedge fund, which basically never happens. So that's fun.
Yeah, lighten up. I just don't know when I read about a guy like Shkreli who like he does. I see what you're saying. Like he seems very smart and like whatever, but like how smart can he really be?
Wait, a precursor to Keith Gill?
Like doing some.
Wait a minute. What?
Keith Gill
is just a guy.
Deep fucking value, right?
I know he's just a guy in his house that like did some like fundamental research and bought. It's like Martin Shkreli
came from like a banking background. He was on Wall Street before that.
Yeah.
He's just saying in terms of like being like a, analytical.
All right, hold on. People are talking about the market, so we got to bring that up right now. Martin Shkreli also bought the licenses for the patents for drugs and hiked them a gajillion %. So.
Yeah,
it's not quite.
That's what I'm saying. It's hard for me to like look at a guy like that and like say, do I really think he's smart or not? Because like, maybe you do have to be kind of smart to blow up 2 funds by 25. I don't know, but you got to be kind of dumb to do it too.
Wait, since we started this show, what the heck is going on? Since we started the show, sorry guys, we've been all off in our own land, La La Land, the last half hour. Do we have any actual headlines here? Why we just ripped there? I know we're off the high now, but I see nothing that would indicate in pro as far as headlines go. What do you think? This is just technical? Thoughts on this? Yeah, this is the first time I'm seeing the SPY chart in like an hour. So, look, it has paid to fade these moves. That's all I'll say. How are the Qs looking? Same thing, right? I bet. Yep, yeah, same thing.
We're agreeing to disagree here, Spencer.
What do you mean? It's paid to fade.
No, I agree with you there.
Okay.
I don't think Like, I just wouldn't want to get short right. Like, literally, the S&P 500 has been down 6 weeks in a row. Like, now you want to get short after 6 weeks? Like, you're going to run through my trades that I've opened today?
Yeah, please.
All right,
let's do it.
I'll share my screen. I'll share my Robinhood YOLO account.
Yeah, my Weeble YOLO account is empty. It's got no positions.
I emptied my Robinhood one too because I was like I
got no positions.
I don't want to trade in this environment, and I left like a couple $100 in there, and I got sucked back into it. I was like, this is too fun. All right, so here are the BABA calls that I opened today. I told you I was going to get into.
Yep, you mentioned those.
Up 117%. I've got my QQQ calls up 100% right now, and then I've got my Upstart calls up 80%. These were all ones I got into earlier. I've been trimming out of a few of them, so nothing that I'd say get into now. And again, this is not investment advice, but I'm not selling all these positions here. I'm holding on to these in hopes, not really because I think we're gonna keep ripping this afternoon, just because I hope so. That's what I'm rooting for.
All right. We're waiting for Hot Stocks, Luke Jacoby. I just saw that Vivi, the Bio Queen, hopped on. Vivi, I almost texted you. I thought you forgot about us. She didn't forget about us. She's here right now. Let's hop on for a few. Vivi.
What's up? It's really hard to get motivated to talk to you guys when you see this.
It's hard to get motivated to talk to me. Am I that painful to talk to?
No, no, XBI at $69.
I know. Yeah, but Vivi, here's what I thought. If there was anything to like in biotech land, you would surely find it, no?
Yes, I mean, there's a lot of discount, but right now it's like everything is at a 60-70% at a discount. Is the money going to return to biotech? I feel like my main concern is the really small caps because they don't have, they don't have they don't have like the commercial side. They don't have the money,
Yeah, exactly. You need to make money. That's what the market is saying right now to every publicly traded company, and the private ones too. Actually, you need to make money, and a lot of these biotechs don't make money yet.
No, I mean, and if you look at it like a BCRX, after the whole pause of enrollment. Jesus, at 886, they are going to do 200 million in sales. So it is a little bit like there's a lot of beat down pharmaceutical companies. They're actually making money, that at a discount right now because, obviously the SPY being at a 32, Everything. Look at Apple at 139. Everybody's suffering.
Yeah.
Tesla at 710.
Right.
So it's almost like the opportunity now it's to buy and hold, But the problem is, a lot of people. What I was reading, 35% of the Americans pull their money out of the market, so they don't know what. Yeah, that's what I don't. I just saw it came over yesterday. 35% Americans took their money out of the market. So
I'm Googling this right now.
That's what I want to be buying.
I'm Googling that. I can't believe that. 35.
Well, so from what I was seeing was
Google it. I saw pulling up like yesterday or 2 days ago.
Okay.
At least I saw data coming out from at least April that like it was like retail investors are still buying the dip, but then I think there was, I don't know, there was another headline that said like this is when a lot something similar to what you saw.
All right, this is from a CNBC survey. Surveys are meaningless. It's not. I'm sorry, not a CNBC survey. It was a survey from Magnify Money. Surveys mean nothing.
True.
You guys know this because I joined a month ago. I joined AAII to participate the American Association for Individual Investors, and you know they have their bull bear survey, and I joined just to participate in the survey. And what do I know? Right? So like,
I mean, look at it. Like Myovent is a great company now.
Wait, ticker.
MYOV. Now they're trading at $9.93. Like they're like less than 50% of they're producing sales. They produce. So the company that I told you guys that just got the FDA approval, they put it almost $850 million in Japan. Is a PHAT, and look what are they trading at today? So
PHAT. This is a good one for me.
Yeah. So they just had the approval of FDA approval like last week or a week ago. And they just lost 50% of the value. They're launching their sales force. I ended up not going with that job. I got another job. Geez, I'm so glad that I have a job right now. I'm like this one.
Yeah.
I'm like, it's nice just to compound slowly a day and not worry about paying my bills. Trying to get rich quick and pay my bills. So I'm still trading every day, but it's like small little gains every day.
Yeah. I actually agree with Jay Rice's comment in the chat. Vivi, these small cap bios are probably going to take years to recover.
Yeah.
You're probably going to have better luck on the large caps.
Yeah, like right? For example, L and Y. Look at the daily chart. It's one of my favorite companies, rare disease companies. Look at how much we still have like a 40% gain if we buy there. So I agree with the small caps. Are going to be hard to even survive like on their own, like fat. They're like launching a drug by themselves. And I think it's going to be really, really hard for them to go alone. But it's like I would be accumulating ALNY, ABIV, because they're all like at a good discount. Besides ABIV has not dropped as much, but
yeah, AbbVie has been strong because I think that's what we need to look at in the biotech space, Vivi, is look at what are the companies that are currently profitable, making money, your AbbVies, your Abbotts, whoever
your Johnson
versus your kind of pre-revenue biotech companies that are really more dependent on FDA approvals and headlines like that than they are what's going on with the actual business.
It's scary because it's all about innovation, right? And if these small biotech companies don't have the capital to continue to innovate, continue to find cures for things, it's just really crazy because the money has kind of gone away from the small caps. And now people are just putting money on the big caps because they're the ones that are actually, with interest rates being up too, it's really hard to raise money now, right? It's expensive. So it's really concerning, to be honest. I was telling people, teasing, I was gonna call myself the homeless, bio homeless, not bio queen, because all my bio homeless, not bio queen. or bio.
Or like, you got to downgrade, like bio princess. You got to downgrade from the queen.
Yeah,
Yeah.
I go to my 401k and all the small caps that I think.
Vivi, don't do that. That's your first mistake. Don't even look.
I know.
I know.
It's sad. It's sad. But anybody has any picks that I can research for next week? It's like I told you guys, if they're not producing capital, it's not even worth to invest right now. I would have stay away from small cap.
That's fair. Totally fair. Hey, what about Inovio? That was on the top of my movers tool this morning in Benzinga Pro. Is it still up? Let's take a look. Yeah, it's up 15% today. Oh, wow. It's up a whopping 27 cents. INO.
INO? What
yeah. Happened? I don't know. Don't make me look it up. They're gonna. What is the news here? They had wait, what? There's monkeypox.
Yeah, first case of monkeypox.
There's monkeypox.
Wait, okay. Oh my God, are you gonna tell me Inovio saying that they have the cure for monkeypox?
No. There was a TNXP today.
I'm gonna go. You're gonna make me go on my. You're gonna make me go on my Inovio rant again.
No,
that was TNXP this morning, guys.
Guys, do not fall for every single time, right? We can go back to Zika. Inovio came out and said, "Oh, we're working on this. We've got it covered, guys." And the stock ran up, and then it was like, "Oh no, not really." And then the stock crashed back down. Then COVID came, and they said, "Oh, don't worry, guys. We're working on the COVID vaccine." Guess what? If you got vaccinated, you went out and got a Pfizer vaccine or a Moderna vaccine or maybe a Johnson & Johnson if you were unlucky.
I got an Inovio.
But you did not get an Inovio one.
No, but look at the TNXP. TNXP was the one that said on monkeypox.
Wait, TNX...
XP.
P. Okay.
News today about monkeypox. I don't even know what that is.
Wait, let's pull up the chart here. What is this? What is,
I don't know. It was pre-market. It went up a pre-market.
Oh yeah, look at the volume today. Holy cow. It's up 6%. Yeah, it's up 12 cents today.
Yeah, monkeypox story update today as cases are now reported in U.S., Canada, Italy, and Sweden. UK is seeing a quick ramping case. It looks like the virus has mutated into a much more easily transmission human to human. So they have, I guess, they say here, the human to human. And they also had a reverse split, a stock split. So maybe that's why. But it was because of a monkey. So here's what they say. It took CDC months to admit COVID was human to human. So the CDC says it's concerned about unusual outbreak of a monkeypox in UK. The outbreak could spread beyond UK borders, the agency said, particularly because there appears to be some undetected spread of the virus. So
great.
That's what so TNXP has a live vaccine designed to protect against smallpox and monkeypox, and the news of the UK came, so everyone jumped on the stock. But it's like phase 1. I mean, come on, It's
wait. Just to be clear, TNXP, they have a vaccine for this already approved. Is that what you said?
No, not approved at all.
All right. Phase 1. Okay, phase 1. Fine. Phase 1.
TNX A01 doesn't even have a name of the molecule yet. That's a joke. But people just, took advantage of the market and then bought it,
right.
And traded. But
wait, Mage Pie, what's the ticker on that company? Bavarian. He said we got a Danish company that has a monkeypox vaccine. He says Bavarian. I don't know the ticker. I don't know if it's public. I don't know if it's in the U.S. But any other tickers we have for Vivi, and we can give it to her, and she can come back to us next week.
Do you know who is the biggest? I'm sure they're gonna restructure, but who is the biggest holder? XBI is the biggest holder for XBI.
If I had to take a wild guess, I would say it's Vanguard or BlackRock.
No, for companies.
The biggest weighting with
the biggest weighting. Let me guess.
Abbott.
That's a good guess.
AbbVie.
I want to guess. Hold on. I want to guess
Moderna.
Shush. Moderna's a good guess too. It's probably not Gilead, right? It's not Gilead.
No.
What is it?
Shocked.
Illumina.
Nope.
Good guess. What
Bluebird
is it?
Bio.
Stop.
No.
Vivi, what is it?
Ocugen.
Oh Jesus! Really?
Yes.
But is that because the stock ran up?
Ocugen is the largest weighting in XPI. Stop it.
Yes. So Ocugen It's almost at 1%. Their top 10 holdings, it's considered the top 10 holdings, 8.60% of total assets. And Ocugen, had the vaccine that had no mRNA, and I don't understand why, it's been used in Israel, but because there's no big money, right? There's not big pharma investing, and never got approved. So the stock people, I had a friend that in his group, people lost over $2 million in Ocugen. Look, it went from $15 down to what? What is it now?
Ocugen, it's $2. $2.24. Yeah.
Yeah. So if you look at the daily chart, what was the highest?
The all-time high. The all-time high was 17.
1765.
Yeah. Well, that was yeah.
Can you imagine if you bought there 1765? Because everyone thought it was going to get approved.
Yeah. Yep.
So yeah.
All right.
So if you guys have anything, just send me in the chat or just send me a message on you.
Yeah. VERU. Nav wants to know Viru. What's going on with What's going on with their COVID pill? Do you know that? Do you know about that?
I know that they have a COVID pill, but I have not. I'll check.
Okay.
I'll check. I'll let you guys know next week.
Yep.
Zero. Okay.
Yep. That would be helpful. All right, Vivi the Bio Queen. Always great to hear from you.
Guys, yeah, always nice to hear you guys. I was watching your show, so I'll talk to you all later.
Bye.
Have a great weekend.
All right. Supposed to have Hot Stocks Luke on the show for a few minutes. Should I go grab him?
If you want.
He said he's going to come on the show.
I just saw him on the phone though. So go see if he was on the phone.
I'm going to step away.
Right.
By the way, someone just joined our stream like backstage, and then he immediately left. Did you see that?
I did not. Was
Someone
it
just,
Andy?
I don't know if it was Andy's assistant. I don't know who it was. Someone just hopped in backstage, and then they saw what they had done, and then they left right away.
All right. Well, you're going to.
I'm gonna go grab Luke. I'll be right back.
I'm gonna pull up this thread because I like.
You gotta share your screen though.
Yeah, I'm doing it. I like this guy's thought process because I had never really thought about it this way. So this is a guy on Twitter. It's at valuations_. I don't really know much about his account. He said, I can't find one name that is a screaming buy at today's price. I can name longs I like that I think will perform well long term, but I remember buying Nike at 60 and Goog at 1,000 in March 2020. Those were screaming buys. So basically he's saying even though the environment might be similar to March 2020, he had an easier time finding companies that based on their current price and the fundamentals of that company were just absolute screaming buys. He goes on to say, obviously macro was scarier back then, but I'd say this is the muddiest macro picture we've had since. I want to buy from people who are puking against their will. Doesn't feel like that yet.
Yeah.
And that's the part where I was like, wow, I've never thought about it that way. Like you can literally, like if the market gets bad enough, you can wait to the point where you're buying from people that don't want to sell. They don't want to sell Apple at 125. They have to.
Yep.
And like to me, I was like, okay, yeah, that's a good mindset to have. Like you want to have that cash available for that if that happens and people are selling against their will. They're selling things they don't want to have to sell. You can be that person there that's scooping up these names at screaming buys.
Yep.
And I agree with him in the point where I do think it's harder right now to look at companies. Like I can look at Apple and say, oh, like for most of Apple's, over the last 20 years, it's relatively trading pretty cheap right now, 22 PE. But is it a screaming buy? No, not at all. And in large part because of what we've seen just in the last week or so of there's indications that consumer demand may be shifting. People aren't maybe spending the same way they were post-COVID, and maybe that won't bode well for Apple in the next few quarters. But and exactly, this sell-off has been methodical. People are selling because they want to sell, not because they have to. People are,
and when they have to, what's that called? Capitulation.
And someone saw margin calls, which I also
it's also called margin calls.
Had me thinking about it. I started watching Margin Call last night.
I love
it's
that
on
movie.
Netflix.
For whatever reason, the YouTube algorithm every like month or so, the YouTube algo will just recommend margin call clips to me.
Oh, that's probably because you're on Benzinga's YouTube and they see how I invest. So
That's definitely what it is.
Assume.
I've seen the movie about 3 times.
I started watching it. I literally like turned it on last night, like while I was in bed.
Oh, it's
Fell
great.
asleep
It's
like 30 minutes
so
in.
good. It's so good.
Yeah.
It's so good.
Kevin Spacey, a little problematic now, but he's in it.
Yeah, but at the time though,
who's what else is that? Is the junior analyst? What else is he in?
he's in Star Trek.
Is that what I recognize him from?
He's Spock. Yeah.
Okay.
Yeah,
that's what I recognize him from.
Well, Hot Stocks Luke Jacoby is on the phone right now. If he can get off the phone, he would join our show. But we have to get him off by 12:45 anyway, because that's when Andy Hayward's coming on from GNUS Brands. Boiler Room, also a very good show.
Yeah, we should power rank and granted out of Margin Call, Boiler Room, Trading Places, Big Short.
Yeah.
Haven't seen any. I've seen 30 minutes of
Rogue Trader.
No, I haven't seen any of them. So I'll make that. Yeah, Zachary Quinto, that's his name.
Yeah.
I've seen him around like a bunch of different stuff, but it's funny like watching something where the guy's like 15 years younger than like what you recognize him from. Be like, oh, that's that guy.
That's that guy.
And then the other guy that's in it, Penn Bag.
He's in You.
Yeah, he's in You,
yeah.
and he's also in like Gossip Girl and stuff.
Yeah, he's in stuff. All right, so we got about 15 minutes, and then Andy Hayward from GNUS Brands will join us to talk about the deal yesterday that they made, or they signed, or they made public with Marvel Entertainment. They are licensing Stan Lee's name, likeness, signature footage to Marvel for use in things. We'll ask him about that. Ask him about this, what this means for the company. There wasn't too many details.
Oh,
in that
also,
PR,
yeah. So this guy brought up Billions. So I've never seen Billions or Succession. They seem very similar to me. If anyone's seen both,
I've seen both.
Can someone recommend like one or the other, or if I like this, you'll like Billions more, or if you like this, you'll like Succession more?
Billions starts off strong and then gets weak. This is a Succession thus far has started off strong and stayed strong.
Yeah, happy Rivian. So I've been talking about Rivian a lot on the show. I actually added it in my Roth yesterday. So when Rivian hit its low, which, let me pull up the chart real quick. Or Spencer, are you pulling it up?
Yeah, give me a second. You want a Rivian?
So when Rivian hit its low of, let's see, like it got to like $19 on May 11th.
Okay.
Was that last Wednesday? At one point, Rivian's market cap, with where it was trading at, was like $18.5 billion, and it had $18 billion cash on hand. So if a company is trading at the money that it has on hand, that's basically saying the market is valuing the actual company, the enterprise value, at zero. Now the stock has, as Happy said, has come up about almost, I don't know if it's actually up 50% from those. Oh, yeah, 20 to 30. Yeah, basically it's gone from 20 to 30. Now the market cap is like 27 billion with still 18 billion on hand. There's still only, the enterprise value there is only $9 billion. With that said, Rivian's expected to burn about $7 billion of cash this year, bringing down its cash on hand to $11 billion. And all this growth, or all this revenue is not going to come anytime soon. It's all down the road. But
Yep.
I'll scoop up a company like Rivian if it's trading at or around its cash on hand.
I'm sorry, and what did we say that was? I'm sorry, I was
18 billion, which we can see in here on Benzinga Pro. If you go,
we can see that.
In
Go
overview,
into the overview
you
tab.
can see it in overview. Scroll down.
You scroll down, a bada bing, a bada boom. Oh, look at that, cash on hand, $16.4 billion.
Wait, so they've spent $1.5 billion since the last time I checked.
These numbers are, again, we only get them once per quarter, right?
And then they don't have a lot of debt. They are, like I said, they're expected to run through some more cash, but they're also potentially going to be able to raise if they need to. So it's interesting. I mean, I like Rivian like long
I know.
term.
You like it, which is good to have conviction. Hey,
I hated it at 100. I like it at 30.
For whatever it's worth, if you were chasing that SPY move or the Q's move upward, you have not been rewarded for that. We are pretty nicely off the high of the day here across the board in the major indexes. Someone keeps talking about oil, which I have not looked at in a couple hours. All right, it's up today. This is the USO. I don't have futures on here.
Kevin Rivian said that by 2025 they'll be producing their SUVs at scale. I believe that's their plant in Georgia they're opening, which is where a lot of that $7 billion that the company plans to sell.
Oh man, okay.
Plans to spend this year.
We're seeing serious action here in a lot of these really beaten down names. Like thank you for bringing up Lucid. How's Roblox doing today? Up 8%. I bet you SoFi is having a great day. Yup, SoFi.
Asana.
How is Asana? I bet you it's up 11%. All
Upstart.
right, this is where Upstart's still up. This is where the trade is for now. Okay, keyword being for now. Virgin Galactic, which is somebody asked about this one. All these stocks are trading higher with the rest of the market trading down. I don't really get it. I'm gonna say this. Go just zoom out. Okay, look left. All of these stocks that are in massive downtrends, all of them will have periods, days, or even a week, or even 2 weeks. Let's go to a weekly chart here, right? Virgin Galactic at one point had, let's see, 2 up weeks in a row in September, 3 up weeks in a row in March, right? From March to April, 3 straight green weeks for space, okay? It's giving it back every single time. So unless you think this time is different, I don't see why that would be the case.
I honestly think part of it, and this is me speculating, but I think part of it is the fact of what I was talking about earlier, that in this environment, the value names just aren't, your Walmarts and
value is ground zero.
Your Walmarts and your Targets aren't as sexy.
Look at that. Look at that chart.
And let's go in retrospect, we can go back and look at the stock charts from 07, 08, 09.
Yeah.
A lot of these companies that are value names that are making a lot of money that aren't like pre-revenue growth companies, their stocks performed not well. So if you could go back in time, would you want to be investing in those stocks that didn't perform well, or the stocks that were huge growth stocks at the time, Facebook's, Amazon's, whatever? Because if you're not going to get that return on your investment while the market's being shitty anyway, you might as well get that exposure to the growth down the road.
So this is what I would do if you wanted to go along any of these like Unity or Roblox, or what was the first one that Lucid. That's a big gainer today, right? Lucid's up 12%. You want to go along any of these guys? This is what I would do. All right, and this is only for a trade, because you can look at how's Shopify doing? It's probably up today. This is what I would do. Okay, you gotta be diligent with your stop. Okay, so the stop is, what's the stop? Stop that I would do if it were me. I'm not going to buy the stock, but if I was going to buy it on the long side, I would stop out at, you have, looks like 1, 2, 3 highs. The high from each of the last 3 days is 18. It's around 1840, right? So that'd be it for me. $1 away. I would be risking $1. 1840. That's my stop on Lucid. That's where I'd say, okay, I'm wrong. I'm out. Get over it. We're done. Move on. That's what I would do on Lucid. You really got to be careful with this, because, look, if we go to a weekly chart on Lucid, this thing had 2 green weeks in a row in March as well. 3 green weeks in a row in December, in January. Okay, those gains don't hold. Shopify, you guys, this is what I did with Shopify, right? I took a flyer. I took a flyer. The stock was at 600, right? Like where'd I buy it? I bought it at, I think I bought it right around here. It was right about a month ago, right? Somewhere in this neck, this neck of the woods here, like April 13th. And a couple days later, it got down to 5. And that was that. Okay? This is a stock that I will buy again. I will buy this again. I don't know when, but I will buy it again.
That's a good idea. Shake wants us to look at the GNUS chart before Andy.
Yeah, okay, that's a good thought.
And Hunter's asking for the best software growth company long term. So we are.
What a hard question.
We're gonna get
what a hard question.
Peter Offringa on the show.
Yes, we should.
Who runs what's the name of his? It's SoftStack.
And can we get the hypergrowth guy on the show?
Muji.
Can we get them on? These guys were at our conference last week.
Yeah, Stack Investing. At Stack Investing on Twitter. Software stack investing, deep analysis of SaaS companies by technology leader who made software purchase. So he was at the FinTwit conference. We're going to get Peter on the show. So he's your guy as far as software companies go.
Yeah.
Hunter, what I will say, obviously the SaaS companies have been getting absolutely hammered.
Destroyed.
There are a few that I think are more interesting than others. Is Snow technically a SaaS play?
Yes.
So something like Snow, I like Snow, Twilio. Snow and Twilio are probably my two top ones just at the top of my head. That's not investment advice. It's just if you like put a gun to my head and we're like pick two software companies to own long term, those would be two of them.
Yep. I don't have a good answer to this question, Hunter. I would say look at companies that have a forward PE not higher than 50. That's a pretty low bar to clear. 50 is still pretty high.
What PE of 50?
50 is still high.
Well, a lot
so
of these SaaS companies don't even have PEs.
I'm being generous here. Look for companies that have their EBITDA going in the right direction, right? Quarter over quarter, year over year. Their earnings going in the right direction, year over year.
Ali Yong saying now. I think ServiceNow.
Now is not a bad idea.
Yeah,
actually.
ServiceNow is very good.
Now is not terrible.
Idea as well.
Yeah.
Basically, yeah. I mean, what about? Are there some? There's some like more cybersecurity SaaS.
Cybersecurity has been, well, not anymore, but it was the pocket of strength in tech. Yeah, that's a great idea. I'm still long, guys. I still own CIBR, and I'm not selling it.
I mean, just think about it logically, right? As more things are just brought online on the cloud, it creates a bigger need for cybersecurity. Yeah. Whether you're talking about government contracts, whether you're talking about big corporations. So it's like a company like Fortinet or some of the other big, who are the other big, Cloudflare,
Palo Alto,
like those guys can get big government contracts, big contracts from Fortune 500 companies, right? Your GMs, your Coca-Colas, all these companies need cybersecurity. All the government does as well. Yep. So I do think the need for cybersecurity is just going to keep increasing as we get more and more online.
Yeah, I still like AMD. I do.
That's not really a SaaS play though.
Oh, that was the question, right? SaaS. You're right. Sorry, it's not.
But I like AMD as well.
Oh, I still like Salesforce.
Yeah, CRM.
I still like Salesforce.
Asana.
No, well, I mean, you like it. I don't. That's not to say I would buy Salesforce here, but it is the king of SaaS. Literally the king. Salesforce like invented SaaS. Okay, so if you're gonna bet on a horse, why not bet on the biggest one, the favorite, which is Salesforce? Is sort of my take.
I was born in the SaaS.
Yeah,
raised by it.
You think you adopted? No, you think you were what? I butchered that thing. Whatever. All right. Before we bring on Andy Hayward, someone had the great suggestion if we just bring up the GNUS chart, which I will do. We'll go different time frames. We'll go daily. But of course, you know why he's here. He's here because of this action. That's what we're here to talk about. Why did this happen? You know why it happened yesterday from the PR. That's why we're gonna bring it. That's why he's coming on today. So we're gonna bring Andy on in like 2 minutes. In the meantime, this is what I'm gonna do. I'm gonna grovel for a second. I noticed we only have 69. That's convenient. 69 likes.
Nice.
On the stream right now. If we get to 400, I will bring Andy on immediately. If we get to 400 likes, I'll bring him on right then and there on the spot. Even if it happens the next 30 seconds.
Jay Rice saying no CRM for me there, woke. I will say I noticed.
Wait, Jay, I can't tell if he's kidding or
not. He's not kidding. Oh. I will say I noticed that I was on like Slack's website the other day, and they have they changed their like Slack logo on their website to like the Ukraine colors, and I was just like, oh, give me a break. Like I think it does. I have to use Slack for work anyway. Like I don't like. It's not going to change my opinion of Slack or not if they change their things to the Ukraine colors.
Yep. All right. Sorry, catching up on the chat here. Yeah, you can only hit the like once. Yeah. This is the paradox of liking the stream for sure. Again, I'll bring Andy on right now, literally right now, if we get to 400 likes. If not, we're just gonna have to wait another minute. Because but hey, liking as much as it sounds stupid, it really does help the stream in the eyes of YouTube for
hell yeah,
for some reason.
Smash that like for us, y'all.
Smash that like, and Sorry, I'm reading the chat right now. Yeah. Any thoughts on AI? Whew, tough one, Hunter. That's a tough one because that thing got so overdone. There are a few charts that look uglier than that. All right, so unfortunately, we were not able to grab Hot Stocks Luke Jacoby today, but that's okay. We'll get him on later or tomorrow. However, our next guest is here. I think he does not need an introduction. I think you all know. I think that's why most of y'all are here, right? Not for our lovely conversation, I suspect. But to talk to Andy Hayward, right? Who, as I mentioned earlier, was last on the show last August. So it's been about 9 months since we spoke with Andy, and we got some things to talk about. Are you ready?
Let's do it.
All right, let's give him one of our newfangled, extra special guest intros. Andy Hayward, welcome to Benzinga Live. How's it going?
Good. How are you guys?
Doing fantastic. You have had an eventful day or so. So for anyone that is just out to lunch here and has no idea who you are or why you're on this show right now, give us the news in your own words from yesterday.
Well, yesterday we announced a deal with Marvel and the Walt Disney Company, where we licensed for 20 years to them the non-exclusive rights to use Stan Lee in Marvel movies, television, entertainment, and the rights to the Walt Disney Company to put Stan Lee inside the theme parks, theme park experiences, cruise ships, etc., and to have merchandise of Stan Lee that they create, for which we earn royalty income for the next 20 years.
Let's talk about some of the terms if we can, because the PR was a little bit light on that front. Can you tell us any financial details here?
We can't tell the financial details because we're under confidentiality with the Walt Disney Company. However, okay, I think everybody is aware how big and important business the Marvel business is to the Walt Disney Company. And Stan Lee, of course, is the thread across all Marvel movies. He was the creator of 14, I believe, of the top 40 box office films of all time. Characters like Spider-Man, Iron Man, Incredible Hulk, Guardians of the Galaxy, Black Panther, Captain Marvel, Captain America, the Fantastic Four. The list goes on, and including the #1 box office movie of all time, The Avengers.
Right.
And it's a multi-billion-dollar business, and for the Walt Disney Company and Marvel, and we have all rights of Stan Lee: his name, his likeness, his signature, his voice, his merchandising, his consumer products. And the importance of this deal to us was not just that it ensures that the integrity of Stan will continue and will be exposed for the next 20 years, at least the next 20 years, in the Marvel movies, in the Walt Disney theme parks, in the Disney theme park experiences, all of which will earn money for Genius Brands, but that we will be able to have continuous exposure, pushing forward our own never before released Stan Lee IP, which will come to the market this coming year.
Can I ask, why do this? I mean, Stan Lee is kind of like he's like a sacred. He's like the founding father of Marvel. He's like a sacred figure in this world. Why do this?
Well, let me answer by saying this. Stan was a mentor to me. I was very close with Stan for the last 25 years. He wanted his legacy to continue. He wanted his legacy to continue with Marvel, and he was proud of the relationship he had with the Walt Disney Company. We became the steward of all of Stan's rights. We really take that stewardship very seriously. We protect the integrity of his brand. We are very cautiously and carefully bringing him forth in ways that that he would want to have done. His IP that he created that had not yet been brought to market has been now put together with some of the handpicked creators that he wanted to work with. All of the creative new materials coming forth are being developed through Michael Uslan, the executive producer of Batman, comic book guru, very close friend and collaborator of Stan's. Greg Hildebrand is doing the design. I don't know if you're familiar with him. He's one of the foremost and most iconic artists in the field. He did the iconic Star Wars poster, the Rings posters. So we've got very quality people, and we're very excited about what we're doing with Stan, and bringing him to the market, we think, is only going to excite the fans and the business.
Andy, I'm just curious about like the logistics of becoming the steward of Stan Lee's, licensing rights. Was that done like before he passed with his family after the fact?
Did you work with the estate at all?
Stan set up his estate. Everything was left to his company, POW, and we worked with POW to do this. I had been working with POW for many years, and POW is our partner in this.
Was there? I'm just curious, like how do these conversations even start? Because I was just thinking about it yesterday and just reading reactions to this, and some people were excited about what this means for GNUS, and others were like, this seems kind of weird to me, right? To be licensed. And just to be clear, we're talking about Stan Lee's name, image, and likeness, not the likeness for Stan Lee's characters. We're talking about the man himself here. I guess I'm just curious, like, did you ever think about that or consider, potential?
We often talk that Stan actually had himself digitized years ago. And there are all kinds of wonderful things that Stan had planned for the future when he was no longer here. So this didn't come out of the blue. Okay.
There's a really good question from the chat. I'll follow up on it from earlier, which is like, when I asked you about the terms of the deal, you said you couldn't because of confidentiality agreements. But then then I'll just read this. Mage Pie put it better than I could. How are investors really expected to properly value GNUS brands if they don't know the value of the deals that you're signing?
Yeah. Well, we get an advance and a license fee from Marvel, and we get continuing royalties from the Walt Disney Company. These will all appear in our Q statements that are filed then, and the Disney Company is fine with that. And that's how everything will come forth.
Is this a situation where Disney only pays for what they use? Yes.
No, we get a fee up front in the beginning, a license fee for the rights for 20 years of usage of Stan.
Okay.
And in the Marvel movies, in the Marvel TV things, and there'll be a variety of different products coming forth. Okay. And they will pay ongoing royalties for all of the various licensing that they do inside the theme parks, inside the cruise ships, wherever Stan appears.
When do you think we'll expect to be able to see these numbers in your earnings reports? Are we talking
the next Q? Q2 will be very telling. We'll be reflecting the original revenue from the transaction. It'll also be reflecting the revenues that we have now coming forth from our recent acquisitions of WoW and YFE and Amoeba.
Sorry, did you want to say something?
Yeah, well, I had something real quick. I wanted to. It was off the Stan Lee subject. If you had one more thing.
No, you can go for it.
So Andy, I just had a quick question, and backing up, this isn't about the Stan Lee news, but I wanted to go, let's say like a couple months ago when the headlines started coming out about Disney being in a feud with the Florida governor DeSantis, and there were a lot of people, basically saying, I don't want to, have my kids watch Disney right now, whatever. Did you see that as a big opportunity for GNUS to say, okay, we can offer these parents some kids content that isn't Disney for maybe some parents that were mad at Disney for whatever reason?
No, we're really not involved in the politics. It's not, what we do.
Nice dodge. A lot of questions in the chat, Andy, about a rumored stock buyback. When is that still in the works, and if so, when?
It is a possibility. It remains a possibility. It's not something that we are going to be doing immediately. We have a lot of what we think are very exciting things coming forth, and very prominent announcements, and we'll let the business run itself. Right now we've got a lot of things going on. We have a very strong balance sheet, debt. We really have no interest rate exposure because of that. I think the most important thing is to run the business, and we are
Right.
doing that right now. As you know, we launched a SVOD channel recently. I think you know that cartoon channel.
Yes, we did.
SVOD, the Kidiverse, and that is going to have a very significant impact on our business as well. We are growing our subscribers. While some parties like Netflix have seen a loss of subscribers, we continue to grow. If you go in the Apple Store, we remain the #1 user-ranked kids service. We're ahead of Netflix. We're ahead of Disney Plus, even in the Apple Store, ahead of pretty much everybody that's out there. Way ahead of Cartoon Network and Nickelodeon.
If memory serves, the launch of your streaming service that was all this action. That was October of last year, if I'm remembering correctly. You can correct me if I'm wrong there. Can you comment at all just about the performance of the stock? And I mean, it's obviously been a tough market for lots of companies, not just you. But like, do you look at this? Can you justify it in some way?
Well, of course, we look at the stock and we see, when it goes up and we see it goes down. Warren Buffett taught me long ago that the stock is a very emotional partner. And if you're not prepared to own a business for 20 years, you shouldn't own it for 20 minutes. Our company began with Warren Buffett. We started producing a TV show with him called the Warren Buffett Secret Millionaires Club. And it's about lessons of financial literacy for kids in various adventures in business. A group of kids have an investing club. And Warren was the mentor in animation of that club. He did all of his own voice recordings. He did everything. And we were very privileged to be a part of that with Warren, and got a lot of lessons from him. And one of the lessons I've learned is worry about the business. Don't worry about the stock market. Over time, the stock market will take care of itself.
Is there a chance now that you've signed this deal with Marvel? Is there a chance for more Disney-related deals down the road?
There is more than a chance. There are a number of things that are being discussed currently, and I expect we'll be talking more about that as time goes on.
Can you give? I know you're limited in what you can say legally, but can you give us any timeline on that?
Keep your eyes focused. Things are not. They're coming forth shortly.
Okay, that's fair.
Anything outside of what we've discussed, the Stan Lee deal, that you think is top of mind for GNUS right now, that investors should be aware of or kind of keep their eye out for?
Well, I think the WOW transaction that we completed was very, very significant and will prove to be even more so as time goes on. WOW is it's probably the largest animation subcontractor in the world. We produce programs like Coco Melon, the #1 animated series in the world, Barbie, Bob the Builder, Madagascar, for pretty much all of the various different broadcasters. We will see the full profitability of this transaction released in the Q2 filing that'll come up in the next quarter. They have Frederator Channel, which is the largest animation-only multi-channel network in the world. We have over 1 billion views per month. That's going to become increasingly profitable. We acquired the largest animation catalog in Europe, to the best of my knowledge. YFE, Your Family Entertainment, traded on the Frankfurt Exchange. We've recognized over $5 million of gains since we made our investment in YFE. Superhero Kindergarten continues to grow. We launched recently in China on Alibaba, through the Alibaba channel. Shaq's Garage is well in production. We'll be delivering the first episodes at the end of this year. And then we have the Stan Lee, the launch of our new products with Stan Lee, the Stan Lee Centennial coming forth. We'll have Stan Lee NFTs coming forth. So there'll be a number of different things that will be bringing to the public awareness as we move forward here.
Andy, a number of CEOs have come out in the last few weeks and months from large companies, such as Uber, and then have said the market is sending us a clear signal. We need to focus on profitability. We need to actually make money. And this was not necessarily a priority for public companies for the last decade, but it clearly is now. So in light of this sort of changing environment here, when do you expect GNUS to become profitable?
It's a good question, and I'm hoping that will be the case this year. We've done 3 acquisitions. All 3 are profitable, but don't forget that we are investing and building in evergreen assets. The nature of animation is it lasts forever and ever and ever. If you look at, oh my God, the first shows I worked at when I was a young writer working at Hanna-Barbera were the Flintstones, Scooby-Doo, and the Smurfs. All of those are still around today. Tom and Jerry was produced in 1939. Kids discover Tom and Jerry fresh every single day today. And the beauty of animation, unlike any other asset class that I'm aware of, is the more you use the product, the more valuable it becomes. It's not like we're making a washing machine or an automobile or a telephone or whatever that you use it once and then you've got a profit and it's gone. We build these products and they last forever and ever and ever. Look at the Walt Disney Company as an example. They have properties that were started many, many years ago.
Yeah.
They continue to recycle them, reinvent them into new and different ways. And kids enjoy these products for a long, long time. And that's the case with everything that we're doing right now.
And you believe that your IP can also have that staying power?
Absolutely. If you look at the team that we've assembled, this is like I call it the murderer's row from the New York Yankees. We have got some of the most accomplished creators and executives coming out of the Walt Disney Company, out of the Warner Brothers, out of Hasbro Toys, people who have been to the promised land, know the road, and are all focused on creating value and evergreen international products that have consumer product licensing attached to the entertainment as well.
All right, I'm being yelled at in the chat right now for not asking you about a reverse split and or delisting. I don't believe you're in violation of the exchange rules as it stands right now, but can you comment on either of those things?
Yes. We are not planning a reverse split. That is not on our agenda. I've oftentimes been asked about that, but it's not on our agenda. As far as a delisting, you have to be below $1 for a year, and then you go on a probationary period as well. We don't see that as an issue right now. We think that we're comfortable we will be above $1.
All right. Andy Hayward is the CEO of GNUS Brands. I think I've exhausted all my questions for you, Andy, and I think Aaron has too. We appreciate you coming. Oh, here, last one from the chat, and then I'll let you go. I'd forgotten about this. Thanks for the reminder. I'd forgotten that you had done some stuff in the NFT market. Is that still a thing? Is that going to be meaningful in any way to the business?
We certainly expect it to be. We think when you look at the IP that we have, whether it's things to do with Shaquille O'Neal or Arnold Schwarzenegger or Stan Lee or the various other properties that we have and those ones that we will be bringing to the market, we expect that to become significant.
Like we're talking this year, we're talking next year, we're talking
this year.
This year?
Yes.
Wow. Okay. All right, Andy Hayward, GNUS Brands CEO. You guys know the ticker, GNUS. Andy, it's been a while. Thanks for coming on. Have a good rest of your day. Have a good rest of your week.
My pleasure. Thank you both.
All righty. Look, I think that answered a lot of questions that were out there. I mean, I certainly hope it did. We asked a lot of questions from the chat. I had my questions pulled up, but I deferred some of my stuff to ask some of your stuff, and we kept them for a solid 20 minutes there. So we appreciate Andy's time. Look, I will just say that if you are in this stock, if you're in any stock, if you're underwater in anything, okay, then only you really know how much pain you're willing to take, okay? That's the truth. No one else can tell you how long to hold on for. That's the only question that you can answer. The second thing I want to say is I feel like there's a little bit of misinformation out there with regards to short sellers, okay? So here I'm in Benzinga Pro, and you guys can see we have this data here on the top right, okay? Currently, and this information is not real time, but it's the best we can do because that's the nature of short interest data, unfortunately. 16% of this of GNUS's float is sold short. That's not low, but it's certainly not high either. It's definitely not an outrageous figure. Okay, I would venture a guess that this stock is not hard to borrow. If you go into your broker, I don't have my Fidelity account pulled up right now. I would venture a guess that the stock is not hard to borrow. So I don't think short sellers are what is causing this stock to go down. I really don't. Well, William Walker, we appreciate your business. I don't think shorts are wise. The stocks go up and go down. They do it all the time. Okay, if you want to sit here and blame evil short sellers for the reason your stock is going down, I think you're just misinformed, unfortunately.
Yeah, we talked about it earlier, Spencer, and we talk about it with with Tim Kloss all the time. It's sentiment that drives the market, and it's obvious the sentiment has not been overall bullish for this stock. Otherwise, it'd be going up regardless of how many people were shorting the stock.
Eric, every stock gets shorted every day. Okay?
Yeah, honestly, if anything, it has. If the sentiment is positive on a stock and it's getting shorted, it actually is like more bullish for the stock, because then it'll cause shorts to cover, which causes more buyers. And would.
All right, a few people say it's hard to borrow on a Thinkorswim. Okay, so maybe I'm wrong. If it is hard to borrow, then that does. Then that can trigger a squeeze, right? But which we haven't really gotten yet.
What I'll say about thank you, Lori.
Thanks, Lori.
What I'll say about the interview and talking to Andy, I'm glad that it sounds like he had, and I assumed this was Stan Lee because he seemed like the type of guy who really he saw that his appearances in movies and stuff made people happy, and it sounded like Andy said that Stan Lee even took the steps to get himself digitized so he could continue to do that.
I certainly hope this.
But I was kind of with you, Spencer, where it was it's kind of weird to use the likeness of a guy who passed away just so that we can put him in a movie, right? So everyone can clap when he makes a 5-second cameo in a movie.
It's a little weird, right?
It is a little weird.
But I mean, part of the deal is just his signature. So just including his signature, you have to pay for. Right.
So but I think with this case, it's okay, it's good at least that Stan Lee was this type of guy and seemed like for all we know, would have been very much okay and even supported this. Whereas if it's if someone bought Kobe Bryant's likeness and starts trying to profit off of it, it's
it's hard not to feel
what are we doing?
It's hard not to feel just a little bit of oh, should you really be doing this?
Right.
And listen, from what it sounds like Andy said, Stanley sort of took the steps to do this. I know there was some weird stuff going on with his estate after he passed away.
Well, there's also been just in the overall NFT space, there's been a lot of NFT projects where someone will create an NFT project from someone who's passed away, and then some other family. I know they made an Amy Winehouse NFT project.
But look again, they're working with POW on this. POW is Stanley's company, as Andy said. So it's not as if Stanley's people had no involvement, which does that should make you feel a little better. If you feel a little bit weird about it, it should make you feel better that he was working, that they're working with his company, and it's everything sounds above board, at least from what we've heard so far. Watch we get one of his children come out and says this is stupid, but I don't know if that's gonna happen. I'm just speculating.
Yeah, we don't know.
But he was, I don't know about that. I don't know how I feel about that, because he was very specific on some things, right? He very clearly said no reverse split, no delisting. Was very vague on others, vague on the profitability thing, which I thought was probably the biggest part of the interview when he said he expected profitability this year, and the buyback, which he was a little bit vague on as well. Real fast, how much cash does this company have on hand? Let's look real quickly. $2 million. All right, not a lot of cash on hand, but it doesn't take that much to do. I mean, I guess I could do a small buyback, but I don't know. Anyway, we had Andy on because the stock was ripping yesterday, and we knew we've had him on before. We don't typically do those kinds of things. We don't typically have CEOs of 75-cent stocks on for 20 minutes on this show, but we did it because we know it's a widely followed stock, and we saw what happened yesterday, and we thought, hey, hopefully he can add some more color, which I hope he did. I will say, just from a very, very, very short-term perspective, it doesn't make you feel great that the stock gave all the gains back yesterday. That's just for a short-term thing. Long-term, clearly some of you believe in it. I think that's great. Have conviction. But in the short term, to see it give it all back on day one does not make you feel super positive about it.
How are we feeling about this monkeypox thing?
Oh, what? Wait, they're saying 50 million in cash. I'm just going off of what Benzinga Pro says. So maybe our data needs to be updated in Benzinga Pro. But it said 2 million in cash there. So unless there's
update, the number of patients treated for suspected monkeypox in the last 2 days in Madrid is between 40 and 50. Hospital sources tell El País. The flow of patients to the emergency services has not stopped.
All right. Enough with the monkeypox. It's more monkeypox references in one day than we've had ever on this show.
That's the last thing we need right now is a new viral disease going around the world.
That would be one of the last things I would hope for. Yes.
I would I don't even know what I would just be like, all right, like can't win anymore. Like, man, oh man.
All right.
Times have been tough.
If you're in Genius Brands, more power to you. It's not really my cup of tea personally, but to each their own. I hope it works out for you. We don't root against anybody really on this show. I mean, we kind of sort of root against Melvin Capital, but that's kind of the exception. So I hope everybody makes money. That's what I'm saying. I hope everybody makes money. It's not possible for everyone to make money, but I hope everyone makes money. Okay. If you're in this thing, I'm rooting for you. Okay. I don't want any stock to go to zero. I don't want anyone to get wiped out. That's just not. Dude, Chris Kelly, no. Why would you short a 75-cent stock in the first place?
Well, because most stocks under $1 go to zero, but.
Yeah, but 75 cents. Think about like think about like just the spread. I don't know what the spread is. I don't know what but it's how much money can you make on a stock at 75 cents already? What you're gonna bet it goes to 50? I guess. Okay, make 25 cents on that. It's no. Look, that's all I've got. Okay, on Genius. I don't know why our TV is like changing color, changing screens. I think we have like a screensaver up.
We've been puking on the cues. I don't know if we've had.
Oh, you're welcome, everyone who told you to paste the fade. Can I borrow your charger, by the way?
Just plug my computer in.
Oh, sorry. Well, I also need it. Thank you. Don't throw it at me though.
No, I just didn't know if we had any like market-wide headlines on the. I mean, Apple's been like weak all day, which is by far the biggest weighting in the queues. And then so like with Apple, you're gonna have Microsoft trading as well. Yeah, I mean Microsoft's hanging on. I don't know. Like I'm trying to figure out why Apple has been particularly weak these past couple days.
Dude, it's the whole market.
Well, okay, I'll repeat what I just said.
Sorry. Okay, what? Repeat what you said.
I'm trying to figure out why Apple has been particularly weak the past 2 days. Yes. Because yesterday, Apple was down 5%. The market was not down 5%, even though Apple's the biggest holding, which tells you that Apple was down more.
I don't know.
Than the average.
What were the Qs down yesterday? Wasn't it like 6%? Qs were down. Yeah, well, the Qs were down like 6% yesterday. I think it was maybe more than that, actually. Apple, dude, it moves with the market, man. It moves with the market. Let me bring up the Qs.
I think it's the other way around. I think the market moves with Apple.
Well, yeah.
And like
okay, tomato, whatever.
Well, I'm saying like the Apple today, for example, is down 2.5%. Microsoft's only down like 0.5%. Netflix is up. Like, so Apple's showing relative weakness against these other big name tech companies, and I'm trying to figure out if there's a good reason for that. Maybe it is that Michael Burry's shorting it. I don't know.
No, that information's been out for how many? Was that was out this week, wasn't it? That just came out. Oh no, that Michael Burry is famous, but he's not influential enough to influence Apple. Almost no one is influential enough to really maybe Warren Buffett can move the stock if you wanted to. Actually, that brings up a cool tool that I found. I want to just free plug for this tool that I found. It's it's like an academic tool that looked. Hold on, I have to. I don't remember what it's called. Let me find the link real fast. I found it like a couple days ago, and it's this tool where if you look up, you can search for a stock, and here it is. It's financial. Come on now. I wish I. Financial Market Insights. Yeah, it's financialmarketinsights.com. And I'll bring it up on the screen. And you go to like Market Insights there, and I'll share all this so you can see what I'm doing. And you can search for a stock, and it'll tell you, okay, who are the largest holders of that stock, like financial firms, and what happens if those firms have 10% outflows. So investors pull 10% of their money out of that firm. So for example, let's look at Zoom, okay? ZM. Wait, Zoom isn't showing up. Okay, let's not do that. Let's do I know Teladoc. Let's do Teladoc. I know that one's in here. Again, it's not like a super polished tool. It's from the Chicago University or University of Chicago School of Business. So I just searched for Teladoc here, and look, ARK Invest is the largest shareholder in Teladoc. What would happen if ARK Investment Management had a 10% outflow? So 10% of the assets got pulled out of ARK for whatever reason, people selling their ARK or whatever. That 10% of the outflows in ARK is worth a 4.5% drop in Teladoc. I think this is a really cool visualization. I'll put the link in the chat. Really cool visualization of the whole like flows over pros idea, right? Like it's actually not analysts or traders that move stocks. It just flows, fun flows, right? Buying and selling from Vanguard and BlackRock, et cetera, et cetera, et cetera. I thought that was a really cool tool. I don't think it's very polished or yet. I think they're still working on it, but check it out. I thought it was a very cool thing. Very cool research. Just fun. Okay. 15 minutes until our last guest of the day, Greg King. We're going to talk crypto with him. If you are looking for a place to hide in crypto, Greg King is a CFA, and he runs a firm called Osprey Funds. They've got a number of crypto-based securities out there in the market. We'll ask him about that and what is going on in the space. And Luke Jacoby tried to come on, but we were on with Andy, and then I pushed him away. And
Luke said to make sure everyone catches him on the Ruel Report, which airs at 7 p.m. on Mondays.
Luke did say that.
Yeah, Ruel Report is our one-stop shop for all things crypto. And
we have several crypto shows. We have the Roadmap, which is going to be off today. We have Moon or Bust. Ruel. We're live here all day.
Happy, how about that hockey game last night?
Oh my gosh. 15
goals.
9-6. Can believe it.
Let's see. I know I feel like I had some other things wanted to talk about. Damn, my calls have gotten absolutely hammered while we've been on this show. Except for my Upstart ones.
That's what happens.
Upstart's hanging out.
Upstart? Dude, it's the trash. And no offense to Upstart, but like it's the trashy stocks. It really is. Wait, what is this ticker that I don't know in the chat? YR, what is that? YRIV? What? 2 cent stock. Hey, 2 cent stock. It's always fun. Okay, don't care about that. Did we miss anything? Let's go back in the pro. I'm sure there's things that we missed as far as headlines of the day. Let me check real quickly. Does it mean or does it feel like a Friday?
It does feel like a Friday.
All right. Hey, how's Hog holding up? HOG. They had that production halt today. All right. Stop going down. Did Walmart stop going down yet? Walmart and Target? No. Oh my gosh. Can they ever just stop going down? Please. I mean, it's killing the market. It really is. Target too. Target killed the market yesterday.
Yeah, Target really did.
New lows now. New lows. Man, it's insane out there. Someone's got to like come to the defense of these things. I don't know who. Well, yeah. What about Costco? Same story, dude. How would you want to be Foot Locker? They report earnings tomorrow. How would you want to be Foot Locker? They're the ones that they got hammered back in February for their last report. Did they get all the bad news out of the way? Probably not. If the last few reports are any indication. I mean, how's Under Armour holding up? I saw their CEO it's down today because their CEO is resigning.
You know what I was looking at, which had a huge leg down, which it's never recovered from?
So many things, but what?
Well, this is from like a while ago.
Yeah.
KDP. Keurig Dr. Pepper.
Yeah.
And if you go on like the way out chart, give me some zooms. Go on like monthly.
No,
candles.
didn't this? Oh no, never mind. I thought this was like a recent IPO, but I don't know why I thought that. All right, this is a monthly of KDP.
Wait, what? Why? Did they have like a split or something?
KDP, it may have been like a reorg.
Yeah, I think so. See, on my chart on like Google Finance in 2018, it has this like big.
No, that was like a reorg because like it was like a private equity thing and they went public again. I don't know. My charts are your charts and my charts say different things.
Yeah, I mean, we've got this big red candle, but at these like consumer staples are the ones that will hold up relatively well if we do go like full recession. Which, by the way, I'm still very much not convinced that like it's a foregone conclusion we're heading toward recession. Can you pull up TLT for me real quick?
I just got a spam WhatsApp message.
I get all this.
You ever get this? Yeah.
All the time.
Can I pull up? Sorry.
TLT, please.
Are we up today? We should be. We are.
Yeah, but look at that overall trend. Like that.
Well, yeah.
That's not what the bond market does in times where people are pricing in a recession.
This is what has people pulling their hair out. Because the 60-40 portfolio, where it's 60% stocks, 40% bonds, is supposed to protect you.
Right.
And it is not providing any protection. The only protection in the last a couple months, you can go longer than that if you want, is like land. Like if you own real estate, you're probably okay.
I honestly think this is what's moving the markets down right now.
What?
Is monkeypox shit.
Monkeypox?
Monkeypox confirmed case now in Massachusetts. Like we're getting headlines from Spain that it's spreading quicker than people anticipated. Like if I had to guess,
you know what we have to do? Go to Google Trends. We have to do this. We gotta go to Google.
Well, if I had to guess right now, and I said this about right when I first started seeing headlines about COVID too, is I was like, okay, this is
is monkeypox one word?
Yeah.
Okay.
That this is going to be like a Zika, Ebola thing where people freak out about it, but it doesn't end up being a big thing. If I had to guess, that's what this is going to be. It's going to be a big news story for a week because it's scary and people are, I mean, yeah, like CNN's
Google Trends
right now, like doing some good kind of fear mongering of monkeypox. But I was wrong about COVID in the sense that I thought that was going to be the same thing and it ended up being different. So
monkeypox search results on Google or search trends on Google Trends. We have a blip here. Compared to last year, remember that last summer?
What?
When monkeypox first like kind of became a thing.
No.
Oh yeah. It's for like a day, right? It's more than that, actually. But anyway, a blip on the screen here. Clearly, there's a. Let's zoom in. Let's go past 30 days here. Perspective is everything.
I know. I'll be. Like I don't even know what I would do if this ends up being like a big thing.
Can I ask a dumb question? What is monkeypox? Like what?
It's a cousin of smallpox.
What is smallpox? Like Like, what does smallpox do to you?
Smallpox is a very, very bad disease.
Didn't we all get vaccinated against that? Or
yeah,
no?
Smallpox isn't a thing anymore because of vaccinations.
Yeah.
But monkeypox is a kind of cousin disease of it, primarily spread through primates, monkeys.
Okay.
That has now spread to humans. And
all right.
there's good news and bad news. The good news is that monkeypox it doesn't spread very easily. Like it needs to be like through touching. Like it's not like COVID where you can just like breathe on someone and get it. The bad news is that people are saying this might be like a different strain of monkeypox that spreads more easily.
Yep.
But yeah, smallpox was like a really, really shitty disease. Like a bunch of kids died from that.
Yeah. All right. So here's what'll happen. I think in a few minutes. So Greg is gonna hop on, and I think you're gonna hop off because you have to get ready for
Raz report.
the Raz report. Is that gonna be live?
No.
No, we're gonna record that. Jason Rasnick, our CEO, our founder, doing another episode of the Raz report today. I won't spoil the guest unless we want to spoil the guest, and that'll premiere next week. So I'll let you go prepare for that, and I'll talk to Greg King.
I can hang out till Greg gets here, but I wanted to. I never finished my. About the
which of your rants?
TLT.
Oh, sorry.
Rant, but just in charge of TLT.
You want me to bring it up?
Also, someone said something like, Chris, like if there's a lot of people on YouTube. You don't have to stay on the show. If you were here for Andy and Andy's gone.
Listen, it's a free country. Do whatever you want. We won't
hang out if you want to hang out,
or don't if you don't.
No one's making you.
Change the channel, man.
So my point on the TLT is like general. You can see, and you can see in that chart we've gotten some green action the past like couple days or 2 weeks or whatever. For the most part, this like everything else has been in a downtrend. Now, if you go all the way back to 07, 08.
Yeah.
Can we do that on here, Spencer?
Oh, sorry. Yeah, of course we can.
We'll just go to like weeklies or something, and then we'll.
How's that?
Or monthlies. So. Wait, can we get like a zoom in on? Let's go like 2006 to 2010.
All right, how about this? I'll go to the daily and I'll just go really far back.
All right. Basically, my point was like it makes sense that once we hit the point where it was like, okay, this is bad. The 07 to 08 recession, like shit's really bad. It makes sense that bonds will take off there. But if you look at this chart, you can see that even before that. There was positive action. There were people kind of seeing that, all right, we're heading toward a recession. We're buying the bonds. So that point right there where in like 2009 you get that huge spike up.
This is 2008. This is December 2008.
Right. That's when like shit really hit the fan and blew up.
Yeah.
But my point was even before that, going back to like June 07, all the way back there.
Yeah.
That's where you start to see the bonds like really start ramping up. And at that point, that we had not started.
No, we had started. The housing market began to crash in the summer of 07.
Oh, okay.
Yeah, I know this because I just finished The Big Short finally.
All right, so I stand corrected.
So the housing market did begin to crash in the second quarter of 2007, and shit didn't really hit the fan for the rest of the economy until 2008. It was like the spring of 08 is when Bear Stearns crashed, right? I believe, and then it really got bad in the fall of 08.
So I was going off of like so this is from federalreserve.org. It said lasting from December 2007 to June 2009. That's like what they give. So I was like, oh, June. So that was people to me like buying. But if you're saying that there were things in the housing market that were like already indications, then that there were going to be some bad things happening. People were buying bonds. Either way, it's just interesting to me that like if it were true, which if you go on Twitter or you like hear some people talk, you would think it's true that we're 100% heading toward this like huge recession, then the bond market would not be acting like it's acting.
Yeah, I agree. I agree with that sentiment. The whole bond market behavior has broken people's brains in the last few months, and I can't say I blame them. The price action in bonds in the last few months has flown in the face of conventional thinking of the last 50 years. So
yeah, and on top of that, I mean, we just for general like S&P 500 market, it's been like historically there's been a correction every like 7-8 years or so.
More than that. Oh, like a 20% correction?
Yeah, like a 20% correction.
I don't know what the
like,
stat is on
that.
that.
Like once every 7-8 years or so, and that's just like the way things work. Like, it can't literally just go up and to the right forever. So you're going to have dips. And and we had the COVID crash, but then within like 2 months that had subsided. And outside of that, we really haven't had that like 20% correction since 07, 08. So it's like completely plausible in my mind that even without a big recession, we get that turn down and then we're back to normal. Who knows?
Yep. Who knows? All right, I'm going to let you go and prepare for the Raz report, and I'm going to say hello to our next guest in a minute. And then I will address this question in the chat from Prezi, which is a gigantic cluster of a question. Prezi. If I were a financial advisor, which I'm not, or a investment analyst, which I'm also not, I have some thoughts for that question regardless. But anyway, let's bring on our next and final guest of the day, Greg King. He's the founder and CEO of Osprey Funds. If you don't know Osprey Funds, you've probably seen their tickers out and about because they have a few crypto-based securities that trade here in the U.S. Let's get Mr. King on the show. Mr. King, how's it going?
Mr. Israel, how are you?
Where are we this time?
We are in beautiful Palm Beach, my friend.
Palm Beach.
See, there's a palm right there.
Yeah, let's zoom in on that a little bit. Yeah.
Yeah.
Looking good. Why are we in Palm Beach?
We're at a conference, permissionless DeFi crypto conference.
Nice.
Today's
Very
the last day. It's been a good week.
Very, very nice. All right, Greg. I mentioned Osprey Funds. You're, of course, the founder and the CEO. Just for the people that don't know, like, what securities do you offer?
So we're a pure crypto-only investment management firm based in Connecticut. We have OBTC as our first product we launched. It's the least expensive way you can own a Bitcoin fund in your brokerage account. That's the ticker OBTC. And we also just recently released ODOT, a polka dot fund. We've got more coming that will have tickers hopefully in the next month or two. So stay tuned. Go to our website, ospreyfunds.io, or follow me, Greg King Osprey, on Twitter.
When you say the least expensive, what do you mean by that?
I mean, our management fee is only 49 basis points. There was, as you can see, there was like a huge demand there at the beginning when we launched for the fund, on account of there was only one fund in the market for 5 or 6 years at 200 basis points. We launched at 49. You know, one of the unfortunate realities of the market, as I'm sure, you know, many of your listeners know, but for those that don't, is, you know, the SEC has not allowed for pure ETFs to launch in the crypto space yet. And so the best we can do is to launch these trusts as OTC traded instruments, which means that they trade like closed-end fund, premiums and discounts. And so when the market gets ahead of itself and there's a lot of retail excitement, the prices can get bid up, you know, significantly above fair value. So you want to watch that. But right now we're under fair value, so it's a great time to look at these.
So let's talk about now. Brian Blockchain is asking the question that everyone is asking. It says, ask Greg if this is the time to go all in on crypto. Well, Greg is not a financial advisor, so I doubt he's going to tell us to go all in. But Greg, is now a good time to buy crypto in general?
I think so. Yeah, I think actually, you know, in hindsight, this will have been a good time to get in. You know, I'm not a financial advisor, but I build products for financial advisors. I'm a CFA charter holder. So, you know, I'm never going to tell someone to sort of go all in unless they're at the poker table and have a straight flush or something. But it's, you know, I believe in kind of the dollar cost averaging, you know, saving for retirement, that kind of thing. But right now might be a time to take a little bit extra and push it into crypto. If you're a long-term investor and you can tolerate a little bit of risk, you know, you got to right size it for your portfolio. But, you know, once all those considerations are taken care of, yeah, I think it's a great time.
I'm dropping the link in the chat right now, the link to your products page, because you mentioned the Bitcoin Trust, the Polkadot Trust, and the Algorand Trust. So based on that, am Am I to assume that Bitcoin, Polkadot, and Algorand, that those are your three favorites?
Not exactly. So we have
Okay.
a Solana fund as well. We really like Solana. And we have a Polygon fund as well. You're
That's
going
true.
to see more coming. So we're a little bit agnostic. We have to take a measured view towards what you launch, right? Because at the end of the day, there's all these considerations. People think that a fund that just holds crypto is super simple, and in some ways it is. But we do a lot of work for people that they may not appreciate, right? We have to vet custodians, make sure that they're holding the assets carefully. We have to make sure that the assets are not considered securities, because that could be a problem down the road. You saw what happened with Ripple when the SEC sued them and alleged that it was a security. All those funds had to get sort of unwound and taken down. So we do a bunch of legal analysis there, and a bunch of other work. So our focus is on delivering what we think are the top projects at layer one. And layer one is really the backbone of the future internet, right, of Web3. And so all the funds we've launched so far support that build out.
Yep. And can you just talk about the structure of these trusts? Because you said that they're not ETFs, because the SEC is not about that Bitcoin ETF life right now. So how are they structured?
So actually, their legal structure is identical to an ETF, which is why we have the option to convert to an ETF should the SEC, get open to that idea down the road, which we've announced, publicly in the past is our intention. So we're just sort of waiting for that, the clouds to part on that. But the legal structure is simply a Delaware grantor trust. It's basically the same thing that GLD, the gold ETF, uses. Yeah. What you need, though, to become an ETF that's tradable on a national exchange, though, is you need the SEC to basically sign off on a couple of exemptions, which include an exemption from Reg M. That's getting a little bit in the weeds, but basically allowing the issuer to simultaneously sell and buy shares of its own fund. And you need that, waxing and waning for the arbitrage to work and the market makers to be able to keep that price in line. Because they don't allow that is why the price gets out of whack. But, knock wood, someday soon.
What is your perception here, your opinion on the crypto market in the short term? Let's call it like 3 to 6 months out. Let's just say rest of the year. Screw it, rest of the year. What is your I mean, things have been pretty painful in the last recent history. So what is your take on the intermediate term here?
Well, it feels like we've been in a drawdown for about 6 months. I think if I use Bitcoin as a proxy, where it peaked at 64K. We're down around 30. It, hit 28, I think was the bottom. That's obviously more than a 50% decline. My thought would be that it's bottoming here. I don't know how long it sort of tends to go sideways, but I would expect it to be materially higher by the end of the year. I don't think this will be super long. There's just too much institutional interest. I think the question of whether Bitcoin and crypto is like a flash in the pan and going to disappear is going away, right? People aren't even, the people who are doing their homework, that's not a question anymore. So if it's not going away and there's all these on-ramps getting built, the brain drain, whether it's from traditional finance or whether it's from traditional tech, right? Because people are leaving the Ciscos and Intels and Microsofts, by the dozens, by the hundreds, to go and build Web3 companies, all which are going to run on blockchains. So this thing ain't going away. And so it's really more of a question of, when's a good time to step in? And I feel like crypto used to be a lot more retail, and it's getting more and more institutional, and that's going to dampen the volatility. That's going to dampen the cycle, because institutions are going to be much more rigorous, mathematical, quantitative about picking their entry points and so on. And so I could be wrong, but my personal belief is it's going to bottom here in the 30K-ish range. It might turn sideways for a little while. I don't know what the next catalyst would be, but if you're picking December 31st, I'd say it's materially higher from here.
And what is just your advice to someone, your not unprofessional advice as a non-financial advisor to someone who is, long crypto, exposed to the space in some way, is looking for some sort of protection?
Well, gosh, I mean, in terms of protection, if you look at a long-term portfolio, your protection should be in your diversification. So the idea of right-sizing your investment, if you put 5% of your portfolio in a while back and now all of a sudden it's 20 and you're not sleeping at night, take some money off the table. That's okay. It's you don't have to call the tops and all the bottoms. But to me, the protection is around diversifying the portfolio to the level of your risk tolerance. Some people are all in. I mean, I know a very high net worth person who's basically got 90 some odd percent of his net worth in crypto, and he loves it. That's just where he's comfortable. So it's really a personal question. I don't tend to view short-term protection strategies like buying puts or something like that as something that should be done for the person you described, which is like an average investor with a long-term view. I mean, if you're an active trader, then you're going to have your own views on those strategies. Yeah. I don't know that I can inform that, but I'd say diversify out, take money off the table if you're not comfortable, but be rational about it too. If you do an analysis on a traditional portfolio with almost any amount of Bitcoin in it, it enhances the risk-adjusted return, which means you make more money long-term for less volatility, right? Like, and that's a no-brainer. If you model out Bitcoin, it will tell you to put more in your portfolio than you probably feel comfortable with. It'll want you to put a lot in there. I mean, a little less so recently because the correlations have increased between crypto and the market. But historically, it's been pretty uncorrelated. So yeah, that's my 2 cents.
And what is your take on regulation? There's obviously we had the Luna blow up, and some of these NFTs have blown up as well, and it sort of makes you wonder whenever that thing happens, like, oh man, there's got to be some protection, right? Got to be some protection. Yeah. What is your take? Do you want more regulation?
That's a good one. I think that more regulation is needed, but I certainly don't want over-regulation, right? So some clarity is needed. One of the ways that intersects with my business on a daily basis is just, which of these projects are commodities, which of them are securities, because that is a fork in the road that dictates how you can trade them, where you can hold them, and all those kinds of things. And we really don't have great clarity there. I think in the stable coins, I mean, the reality is that Terra was really not a stable coin. It was like an algorithmic stable coin, which is a whole different thing. And there's no rules around what you can call yourself, right? So, I mean, these things are happening offshore. So I think people just need to be careful. And, you sort of teed me up perfectly, because one of our slogans is, we say Osprey funds are a trusted guide to select crypto, right? And so I think to a certain extent, folks who want to think about it a little bit, but not too much, can just partner with firms that they trust and, buy their products. We've done a lot of research to roll out the products that we've rolled out. I mean, there's thousands of cryptos. Why did we choose the 5 that we did? You said, oh, maybe they're your favorites. Well, they're kind of our favorites. We also think they're the most promising. And then, for example, we're seeding an NFT fund because I think that space is just, you absolutely need, unless you're doing it 24/7, you need some guidance. You need somebody professionally managing an NFT fund. So yeah, I've got the website up there. So I think that, if people are comfortable wading into all crypto and NFTs on their own, hey, more power to you. Do your homework. Don't believe everything you hear on Twitter. Remember, there's no free lunch. I mean, when people are telling you, hey, park your cash here and get 20% yield and there's no risk,
That was always a head scratcher. Even in the moment, that was like, oh, there's got to be a catch. Yeah.
Got to be. Yep. So, got to do your homework.
Yeah. Awesome. All right. Greg King, founder and CEO of Osprey Funds. Greg, a pleasure to chat as always. And again, I'll drop the link in the chat. I put it there before, but I'll drop the link in there again if you want to know more about Osprey Funds and the funds they offer. And Greg, enjoy the last day of the conference.
Thank you very much. Good to see you again. Take care.
Greg gets to be in sunny Florida. I'm stuck in, it's sunny in Michigan, but it's not nearly as warm, unfortunately. All right, it is 1:42. So here's what's going to go on now. We've got no roadmap today because Chris and the gang are out at VCon, that Gary V NFT conference. So I may just. Oh, I want to wait. Address this thing from Obi. Obi, good call, man. You were right. Give credit where credit is due. Good call. Maybe we should. You know what? This is a problem that all investors have, right? There's a natural bias to your home country. It's true for everyone. It's true for Europeans, Americans, Australians, right? We all have a natural bias to invest in our home country, and we'd all probably be served a little bit better for diversifying across country lines. Although it's hard to do that as an American. It's hard to do that when your markets have outperformed the rest of the world so much in the last 14 years or so. But stop with the spam bot. Jeez Louise. And then I want to address this comment from earlier, which was any good stocks to buy. If you're going to ask a question like that, you got to give me a little bit more, right? You got to give me a little bit more, like how old are you? How much money are you looking to invest right now? I gotta get something from you, because are there any good stocks to buy? There's always good stocks to buy. There's always good other assets to buy. There's always something to buy. But everyone's risk tolerance is different. Everyone's time horizon is different. Everyone's in their own unique position. So, yeah. I don't know. That's really what I wanted to say about that. All right. So, I think that's going to be a wrap on our show today, because we don't have a show after this. So our next show is not till 3:30 without the close. Oh, we're doing a replay? Rohan says. He just yelled at me. We're doing a replay. I didn't realize we're doing a replay. All right. I don't know what I want to talk about. No, I've already seen Billions lighten up. I actually gave up. It's one of the very few shows that I quit on, but I actually quit on Billions. I did not watch this past season. I have no interest. It's gone on about 3 years too long. So, before I go, let's look at the markets and see how we're doing. And, yeah. SPY flirting with... you guys think we can get it unchanged today in the SPY? Well, unchanged would be what? 390? No, wait, we're there. What would unchanged be? 391? 391. We're right there. Yeah, we're $1.50 away from unchanged in the SPY. Think we can do it? I think we can do it. All right, look at these oil stocks, like SU. All right, how's Suncor doing? Again. Yeah, hey, there are not many charts that look like this right now, right? How many charts going back to last summer look like that? Very few. Outside of energy and like a handful of consumer staples, right? There really is nothing over the last... There's very little over the last year or so that I have a chart that looked like this. Hey, is BTU still running? Remember Peabody? Remember that was ripping? Stop going down. Is that a Head and Shoulders? I don't know. Suncor, yeah, Suncor is an oil play. Suncor is an integrated energy company. Here, let's look at the XLE. XLE should be green, right? Oh no! Surprised to see it down. I don't have any direct energy exposure, which means I missed this amazing run in the last few months. But and this is right here as part of that's part of the problem with like the bulk of my investments are in, two very, very broad index funds, and the problem with that is you tend to be overweight. Whatever is like, if you really want to go for true diversification, just owning index funds probably is not the way to go, because like I'm very overweight tech, for example, because that's the nature of the S&P 500 is overweight tech, and if you really want to be equal weight, you're gonna have to do something else. And hey, listen, for some people, and like Obi, for some people, indexes are just too boring, and that's okay. That's fine. There's no one. That's why I love investing. That's why I love the markets. There is a million ways to do it correctly, right? A million. Some people hate index funds. That's fine. I mean, I don't know why you would, besides the fact that they're boring, but heck, they're cheap. Most of them are cheap. If you're doing an ETF, you're getting some crazy tax efficiency there, which is also cool. Yeah, I'm always in the market for more REITs, Lord Byron. I do own the SRVR, right? This is a REIT ETF that I've got. I'm always looking for more, though. This is like a growthy REIT. It's supposed to be a growthy REIT. Hasn't really performed as such. I thought when I bought it, I was buying a growthy REIT, because it's like it's servers, right? It's like a server REIT, hence the ticker SRVR, data infrastructure. But I'm always looking for more real estate. Anyone have any real estate ideas for me? Besides like the obvious ones, like O, which is the largest, I believe. SRET and KBWY. I know SRET. I don't know KBWY. The Yield Equity REIT ETF. Let's look at the holdings of this. I have to go off Benzinga Pro for that, unfortunately. KBWY. What is in this thing? All right, it's pretty heavily exposed to RTL, necessity, retail. I don't know if I want to own any retail. GNL, which I've seen that one in the past couple of days, haven't I? I feel like I have. It owns a healthcare. Healthcare real estate is also interesting, like hospitals. That could be interesting too. So that's OH. It's the third largest holding, OHI. These are all holdings in the KB. What's the ticker? KBWY REIT ETF. All right, I'll write this one down. This is interesting. I don't know why I need to be on a 6-year chart. Let's zoom in a little bit. But all right, yeah. I want to write that one down. I'll have to like look at it more. What else do we have here? EXPI. Just got to mention. Yeah. How's that one doing? Oh, man. Yeah, how high did that thing get? $90? Oh, man, that's tough. That's tough. Monthly dividends are always fun. Like getting paid monthly. Buy a cheap house in Detroit. You know, you'd be surprised, Colin. Not that many cheap houses left. It would shock you. When I moved here, I literally rented a room in a house. This guy just bought like 2-3 houses on this one street, and it was just killing it. He was making his mortgage payment was like, I don't know, $1,000 a month or something, and he was like making 3 times that just from charging rent for like 10 tenants, right? I'm sure he's still crushing it. What else do we have here? AMT. I used to have a friend that worked here. This is cell towers, right? I believe. Like telecom infrastructure. Yeah. All right, I'll write this one down. I'll have to look at it more. I don't actually own any individual REITs. Maybe I'm not against it for any reasons. I just don't own any. SH is supposed to be a short-term tool, but seems to be the only thing that holds its gains. Well, here's the best thing I ever heard about using leverage or inverse funds. And actually, I think Dave Mazza told it to me last week. And he said, you can hold these things as long as you want, but you have to reevaluate your thesis every single day. So you can take it, you can take it home long overnight, right? Wake up in the morning and you're still long or whatever. But reevaluate your thesis every single day. Do I think whatever it is that I'm betting on or betting against, in this case, we're betting against the S&P 500, right? So what SH does, it bets against the S&P 500. So it bets against SPY. Do I think SPY is going down today? And you got to ask yourself that every single day. And if you don't have a conviction on that day, you shouldn't hold whatever it is that you're holding. That's the best take I have. Actually, he had it. I'm just taking it from him. I don't know what that question means. Zahor. Sorry. Yeah, Obi, that's amazing. Housing market is bonkers. That does not benefit people like me, but if it benefits you, then hey, I'm happy for you. I want everyone to make money. Everyone. So congrats to all the homeowners or people that bought houses in 2020 or 2019 and just reaping the fruits of that. Good for you. I'm getting screwed. No, Apple had news? No, shit. I've been too busy talking to you guys. I didn't see Apple news. Let's go to a news feed. Search for Apple. Wow, it's a lot of headlines on Apple today. Holy crap. This seems like the important headline, right? Apple shows headset to their board. Signaling it's at an advanced stage. The headset would be Apple's biggest new product. Has it really been 7 years since the Apple Watch? Here's a stupid question. Headset is just like your is that what I'm thinking? I'm just thinking of like a basic like computer headset here.
I think we're talking like Apple's version of Google Glasses or something.
Oh wait, that was a massive failure.
Yeah, well, we're in a different time now, so could be.
So we're not talking about like what I'm wearing, like a headset with like a gaming headset, right?
Yeah, they're all saying AR headset, which is what I've been led to believe also.
Dude, you know what's crazy? So I guess that would fall into the wearables category. If you look at just Apple's revenue from wearables, it's more than like Netflix's whole company.
I mean, just from AirPods alone, I think is close.
I know.
Yeah, it's wild.
This has always been the biggest knock. This has been the biggest knock against Apple for a decade. Is that there's a one-trick pony. They did the iPhone in 2007. They haven't done anything since then, and that was true for a while. But you can't say that now. You really can't. AirPods, the watch, the whole wearable segment, services is a big part of their business. It's been growing every single quarter. The percentage of Apple's revenue that they get from their iPhone is shrinking because the other parts of the business are growing. So it was a fair criticism for Apple in 2018. I don't think it's a fair criticism of Apple now. They've diversified. They really have. It's not a one-trick pony anymore. So I don't know what this headset thing is, but I'm interested. I can't wait. I can't wait to buy this Apple headset or buy a new one every 18 months. I'm very excited to do that. I'm very excited to buy a new app, and I'm very excited to buy the adapter that it comes with, and the charger for the adapter, and the adapter for the charger. Can't wait. I'll I'll be here all week. Okay. I don't know. I don't know what else, guys. I think it's going to be a wrap on today. As a reminder, stay tuned for At the Close at 3:30 with me and Joel. And then at 4 o'clock, I am talking to Charlie Batch, former NFL quarterback turned cannabis investor, in studio. I am extremely excited. Look, I even, as Shelly was kind enough to note, I even dressed up for him. I wore a real shirt. A real shirt. Smash that like button for me, please, and thank you. Likes are my life. I live my life through the likes. I'd appreciate that. Thanks to all of our guests today. Thanks to Greg King. Thanks to Andy Hayward. Thanks to Vivi, the Bio Queen. And thanks to all of you for hanging out with me here today. I'm going to go. I've been streaming for most of the day. I need a break. Hour and a half break, but I'll be back at 3:30 to walk everyone into the close. And in the meantime, enjoy the rest of your day. If I don't see you, have a good one. I'll catch you tomorrow, I hope, if I don't see you. And peace and love, y'all. Peace and love.